Hi, everybody, and good morning. Hope you guys are all doing well. It is a new day after the inauguration. Now it's going to be quite interesting to see what is going to happen overall, right? It's kind of an interesting time in the markets, I personally believe, altogether, with the inauguration, with the vaccines coming out, with everything. So it's kind of exciting for everybody. So, my goal for today is hang on one second. Let me just finish organizing here. So my presentation is 4 steps to simplify your day trading and to be able to dominate it under any market condition. And I just wanted to let you guys know the whole point of my presenting here for you is I will definitely be teaching you and showing you some of my what I use personally on a daily basis, but it's really about me to help you because I'm sure that you guys are all here with questions, challenges, struggles. So I love questions. Please send me your questions. Some things might trigger you and you'll have a question to ask during that moment. So remember, I am here and I will definitely get to all of your questions. So let's begin. Hi, I am Marina, the trader chick. And this is me. I just wanted to give you a quick bio of who I am, just so you kind of understand who I am. And it's kind of an interesting thing with day traders. We start to forget that it's about humans. It's actually day trading and the markets in general are all about humans. And understanding who we are and be able to put that into our trading is what's going to make us better traders. So I want to give you a little bit more in depth of who I am so that you could also see that anybody is able to become a successful, profitable trader. I am Marina. I am actually an expat. I live in Antigua, Guatemala, and I also am trilingual. And the main reason I'm going to be bringing up the trilingual part is because after a certain amount of time of sitting and learning and being obsessed about the markets, I realized that the market is like a language of its own. And for many years, I wasn't thinking of it like that. I was just thinking of where should I enter, where should I exit, just thinking and looking at it incorrectly. And when I finally realized that it's a language, so much more started to make sense to me. So I'm just going to go into really quickly why I'm trilingual. I'm actually a Russian refugee from the Soviet Union. I was actually born in the Ukraine, where Anna is from. So it's kind of really cool to connect with Anna. I was supposed to actually go to the Ukraine last year and meet Anna as well, which was kind of cool to kind of go and visit where I was born originally. So I do speak Russian. That is my mother language. However, I was raised in the US, so English is my native language, and I learned it at a very young age. However, I have now been an expat in Central America for almost 20 years. Before living in Guatemala, I lived in Costa Rica, and now I'm living in Guatemala. And I learned Spanish. And this is when I realized about the understanding of market being a new language. When you learn a new language in your older years, there is a process. It's not like when a child learns a new language, it's almost automatic. I mean, I see my kids, they were born with 2 languages and Russian, and it's natural. But when you learn a new language, it's a process, right? First, everything you have to do is translate, make sense of everything. If you want to say something, you have to first translate into from your language into that language. It's a slow process. But then one day you'll wake up and it just clicks. And when that happens, it just becomes more natural. I'm not at all fluent in Spanish, but I could certainly be in conversations with many people, and it's much more natural to me. And that's when I recognize with the market language, it's the same thing. Okay. And that's my goal here to show you that it's a language. And once you understand that language, you'll be able to listen to it rather than think you could predict what the market is telling you and think that you can beat the market, because those are the 2 deadly sins out of the many few deadly sins that there is with trading, on top of greed, resentment, and all those other things. But wanting to predict what the market is going to do and pretending that you're going to beat the market, those are sure ways of you losing money. So another quick thing is, before I became a day trader, I was actually a fitness instructor and a travel writer. And I actually still have my site Travel Experta, which It's still going on. And the reason why trading and my sites work and my travel site work so well together is because trading normally, and we will get to normality as far as travel soon enough, is a perfect way. Like you could do it from anywhere in the world, and it's awesome. Okay, so before I hop into the actual presentation, I made you guys a free worksheet that you could download at makingofadaytrader.com. You will download this, and this way you can use the worksheet to work along with the presentation. Just go to makingofadaytrader.com and you'll instantly get the worksheet. And this way you could work with the presentation and follow along. And it's literally what I use to learn how to work with my charts and to be able to spot trades. So go for it, makingofadaytrader.com. So let's begin with the basics of day trading. What's important to understand is the majority of the times that we begin to trade, first of all, a lot of times we just throw money into the market thinking that's how we will learn. Absolutely not. It's kind of like saying, I want to learn how to be a pilot and hopping into a plane, turning it on with your whole family in the back and thinking you're going to take off. And luckily, if you do, you most likely will crash. It's the same thing with trading, right? Trading is a strategy. It's something that you implement and you learn and you practice. And it all begins with the basics. And if you don't have those basics, if you don't understand those, chances are you're not going to be able to do the hard stuff. So before anything, if you are a day trader, if you are a serious day trader, you are going to have a good platform. I'm not talking about buying softwares and indicators and algorithms. I'm talking about a platform, right? If you want to be a pianist, you need to have a piano or even a keyboard, right? You can't just pretend and hit paper notes, right? So a trader needs to have a platform that is going to have really good feed and also accessibility to all the free universal indicators and drawing tools. Okay, I personally only use 2 indicators, but they are 100% free, universal. The EMAs, which is the exponential moving averages, and the MACDs. MACDs to me are my favorite because they are the least lagging indicator that there is. So when I began trading, I was doing like 10 different indicators. Oh my God, it was constant analysis paralysis. And then when I ended up losing all this money, freaking out, walking away, coming back, I decided to just go with the naked bear charts of just the naked price action. But what I did realize is that you do need indicating lines. You need indicators because you need to know where to enter. You can't just throw in your money wherever you think it looks good. No, it has to be very specific. And that's where I put in my EMAs and the MACDs and they work together. And I will be showing you how they work well together. So let's begin. Market movement and the breakdown of a trend. I know that we all know what trends are. We know that there are 3 trends. We know this logistically. However, we have to really understand what they're about. So obviously we have the upward trend, we have the downward trend, but we also really need to understand the power of the sideways trend because this is where 90% of the money that you earned during your trading day and usually more gets lost, right? Because this is the consolidation area, indecision area, exhaustion area, the chop, the channel, whatever you want to call it. What it is, it's a place where it is undefined. It is uncertain. And you cannot be predicting what is about to happen there. And I'm going to explain to you how to avoid it and how to also see when it starts to happen. Excuse me. Okay, so again, trending markets, downward, consolidating market, sideways market, upwards market, upward trend. Each pivot is higher than the other pivot. It's pretty basic stuff, all right? It's called a bull market. It's called a market trending up, market going up, whatever name you want to give it. It doesn't matter. It's heading in that direction. This is when you are looking for the longs. This is when you are entering at a low price and exiting at a high price. You are looking for that long. You are buying. Okay, you're going for those longs. Okay, it's important to understand the difference. If you don't even understand if you're looking for a long or a short, you guys are in trouble, okay? You need to know that from the start where the market is heading. Downward trend. It's literally mirror image. It is, each pivot is lower than the last pivot. Also, it's really, really, really important. If you are really wanting to be a day trader, there is absolutely no distinction, no difference between going long or going short. If you're going to sit around only for the longs, you'll never really go that far, because day trading, we don't care if it's up or down, is 100% technical analysis. And the most important part is, if you are only looking for longs, then you should just call yourself an investor and focus on that, which is an incredibly different strategy. And I always say, we day trade to become investors, okay? Because day trading is quick in and out. All right, when you are looking at a downward market, you are looking for the short position. You are looking to sell. What does that mean? That means you are entering at a higher price, exiting at a lower price, but you're taking the profit in between. This is shorting the market. This is when you are banking the market is going to go down. It's the bear market, the market going down, trending down, whatever you want to call it. It's headed down. Another very important thing, especially for day traders, and I don't know exactly your strategy, but I am a scalper. I don't know if you guys know that, but scalping is to go in for really quick profits. So you could have an overall trend, overall going, let's say it's an upward trend. This could be done exactly the same for a downward trend. It doesn't matter. The overall trend could be heading up, but you could have many immediate momentums and mini trends that you can monetize on, which is literally just a correction. But in the meantime, you could get one or two really good trades, but you have to know what you're looking for before it stops and continues on in that same direction. All right, so let's talk about these consolidation areas, transition areas, literally what I call the trader's worst enemy, and learning how to avoid them and how to spot them. Consolidating market. What is it? Again, it's the channel. It's the sideways market. It's when it comes together. It's an indecision. It's when we don't really know what's going on, right? And this is what is the reason why, excuse me, this is literally the trader's worst enemy. And I can guarantee you right now, I could stake the farm on this, that if you go back into your trading journal, into your back testing data, you will notice that 90% of your losses, if you, first of all, you have to have very specific trade setups. You can't just be shooting arrows wherever, right? Trigger happiness got no one anywhere at all. You have to have specific trades. Now, you'll notice that in your back testing journal, the majority of them gets lost here. And why is that? Here's the reason why. As I mentioned earlier, trading is all about the human emotion, right? 85% of trading, as a matter of fact, is about your mental state, your emotional capacity, right? Any one of us could actually admit to that right now. That is what it's all about. It's about your emotions. It's about humanity. So what do humans do best? We create stories. We create nonsensical stories. That is really what moves us. So what is a story? Let me give you guys a really good example of a story. For instance, you have a good friend. You have a friend, somebody that you kind of just met, but you want to become friends with, and they called you up and they're like, hey, I'm having a party in a few days. I'd like you to invite you. You get all excited to go, and they say to you, you know what? I'll call you back tomorrow to give you the directions and the exact time. So you get all excited because it's a new friend. It's all emotional. It's really fun. But the next day comes and goes. They never call you. The day after, they never call you. So what do? You start to create stories, right? You start to create these horrible stories that go on in your head and that move you. First, you'll probably, okay, maybe did I say something wrong? Maybe they don't really like me. What did I do wrong? Why did I do this? Oh my God, I'm so bummed. How come they're not inviting me? And you go into a really bad state of mind, right? A state of mind of doubt, of no confidence. That is called a story. 3 days later, this person calls you and they are so apologetic. Oh my God, I'm so sorry. My phone fell into the toilet. It totally got wet. I lost everybody's contacts. I wasn't able to find any way of getting you. So what happened? The story you created that made you miserable, it was just that. It was just a lying story. 90% of the stuff that goes on in the market is these stories that we create. And unfortunately, the majority of them happen during these consolidation areas. Why? Here's the reason. This is the stories, and I know that all of you could relate to them. All right, so the market is trending up, and all of a sudden, you take a trade and it gets lost, and then you start to realize it goes here. But you can't accept defeat, so you start to keep on going. Why? Because there are two types of traders in the world, and that's it. I can literally categorize those two traders. One is the trader that is the trend is your friend kind of a trader. And when they see this kind of action happening, they start to tell themselves stories. You know what? The market's been going up all day. It's going to continue. I am going in for a long. And then the second kind of a trader is the contrarian trader. And that's actually what I used to be. And that's when you see something like this moving up, you say to yourself, you know what? The market's got to correct. It's got to correct. It cannot continue going. I am going for a short. And then you go in for a short. Again, two total bullshit stories, because here's the deal, guys. The market is going to do what the market is going to do. And if you do not understand what the market is telling you and what the market is showing you, you are not going to be able to do well. And when I realized this, and when I stopped telling myself these bullshit stories and started to really listen to what the market was telling me, everything changed. Because when you're in this area, in this consolidating, indifference, indecision, exhaustion, chop, whatever you want to call it, area, the reality is you have to do one of the most important actions of all. And that's the action of sitting and waiting. Sitting and waiting. Especially new traders, they do not understand that it's not all about entering and exiting. There's a lot of downtime. And downtime takes up more of your energy than other activities. So remember that. So what do? You sit and you wait until you have a confirmation, because it could go breakout or it could transition to a new trade. Okay? That is so, so important. You need to stay out of those areas. Okay? And these areas could be small, especially if you're a scalper and you're only going in for smaller ones, smaller targets. This could really affect you, right? And they could happen quite often, these consolidation areas. You have no idea what they're going to do, but you have to wait for those confirmations. All right, and here it is. I'm going to show you many ways of how it looks. Now, how do we start to recognize these areas, and how do we mark them and understand them? The market, it respects areas. It respects areas, and we, as the individual trader, the retail trader, who has absolutely zero power of ever moving the market, unless you guys are putting in millions. If that's the case, you wouldn't be in this presentation. I'm positive you will not be moving any of the markets, right? So you have to work with the market rather than think that you can move the market, right? And those areas are called support and resistance. You have to see and recognize these areas because the market respects them and revisits them. And you have to understand where these support and resistance areas are. So let's break it down. What is a resistance area? First of all, understand the power of what these areas are, and you have to put them in. It's not a question of, oh, should I? Maybe. No. It's literally like getting into a car and not putting on your seatbelt. So let's take it even a higher notch. It's like literally getting into a Formula One car for the race and not putting on your safety gear. Because let's face it, the amount of adrenaline that you're experiencing when you're in the live market with your live money, it's very similar to a race car driver, right? I mean, it's so up there. So why is it that Formula One drivers are smart enough to put on their safety gear and a lot of aspiring traders believe that they are exempt from it? No, that's how we end up losing money. So what are these areas? There are safety belts, because if it's an area that is revisited and you don't have it put in and you keep on going into that area and keep on getting stopped out, the reason why is because you didn't put on your safety belt, all right? So what is a resistance area? It is the ceiling of a market. It is literally where the market hits over and over and over and over again. The ceiling of it, anything 3 or 4 touches or more, that's a resistance area. And the more it hits, the stronger that area is. That area could last a day, it could last an hour, it could last several days. Okay, So resistance area, this is an entire session for me, and it kept on revisiting it. Sure, I certainly will be paying attention to the fact that this is an area that is super strong and respected. Okay, resistance areas. What is the support area? It's literally the floor of the market. It is where the market has been hitting several times over and over and over again. And if it's a strong one, it could actually shift that market altogether. You have to be aware of it, you have to understand it, and you have to stay away when it is in this position. Okay, you have to understand it really well. Support area, it's where it's hitting over and over again. Okay, and now in a channel, you have the resistance and the support area. You have to understand where it is over and over again if it's hidden. Okay, you have to have those drawn out. Do not put in mental support resistance areas. Nothing mental works. It's literally like what they say. If you have a wish or a goal, if it's not written down, it's just a dream and it fades. It's the same for the charts. You have to have your charts drawn, okay? You have to understand where all of this is happening. This is just more examples of it. Okay, so now the question is, how do you spot it when it's first starting? And again, this is all part of that language that I was talking about with the market. It actually speaks to us. And the beauty of it is sometimes it screams to us, telling us, stop, I'm about to go into an uncertain area. And we as the trader can listen to it. And this is free. This is not a software you're buying. This is not an algorithm. All you need is a regular platform, right? And you'll be able to use and do this all. And what are they? Reversal areas, and then coupled with divergence. So what is a reversal pattern? You guys know reversal patterns as maybe double tops, triple tops, head and shoulders, right? This is an area that it's literally telling you that there is a very high potential of a reversal. It is not 100%, but it is definitely within 90%. And again, this is a back test. You could back test everything. And if you haven't back tested your strategy and you're going live, it's kind of like a surgeon that's entering the operation room and is about to operate on your kid and has never tried that operation before and doing it for the first time. Would you permit them to do that? Why would you be putting your real money into the market without back testing it in sim mode and making sure that it's working? That's how serious this is. Okay, reversal patterns, you could back test them to see how often they actually show you that there's an indication of change. And I'm not saying to go into an opposite trade, I'm saying to sit out. Learn when to sit out. Now, when you're having a reversal pattern and it's coupled with divergence, and this is where the MACDs play an insanely important role, because the MACDs I find to be the least lagging indicator of all. Okay, they are definitely the least lagging. For instance, volume indicators are known to be extremely lagging. There are many other indicators that lag, that they are not showing you what is happening in real time or giving you clues of what is about to happen. I find that the MACDs show you when the strength is dying in the market and when there's divergence. With reversal patterns, that's it. That's like a scream saying that stay out. And that is usually the beginning of those areas or a complete potential for it to change altogether. Okay, and here it is. So when you have a reversal pattern with divergence, that is just screaming. However, I really pay attention to divergences before reversal patterns. Like here, this pivot is here, and look at this pivot. It's totally further down, but it's flat here. It's telling me that there is now a slowdown in the trend. And I do not want to be near that trend when it's slowing down. I want to be in a super high confirming trend, right? Like here, this has changed. Look at all that movement above my zero line. That's where I want to be looking at. Okay, triple top, divergence. Now, let's put this all together. Before I do, remember, everything I just went over, and actually a lot more, is in this worksheet that I gave you guys, I made for you guys. It's just download it. It's completely free. makingofaDaytrader.com. So you can get this, print it out, or have it, and you could just go over it. And like Anna mentioned, you will be getting this presentation sent to you as well for the replay, so you could go back and really go through it again. All right, so let's go through this. Breaking out of areas. I know that you guys have all heard about the breakout trade, right? Now, how can you possibly do a breakout trade if you don't have your areas put in? If you do not have a support and resistance area, how are you going to spot one of the most powerful setups there is? Okay, so what is a breakout? It's literally when you're headed in one direction, you have a resistance, it could be the opposite, or a support, and then you break out in that same direction. So let me give this to you guys in layman's terms. What is a breakout trade? Breakout situation. Very, very easy to understand. Your friend, one of your greatest friends, calls you up and they invite you to come over right now. You like, yeah, sure, let's do it. You know this road. You have been to your friend's house at least 8,000 times. So you know exactly what you have to do. You live south, they live north. You just got to hop on that highway and head over. So you jump in your car, you are full of confidence and you're going. But all of a sudden, there is a construction site. There's a construction site and you and the construction worker is flagging you to take a detour and you have to get off the main road and into an area that you do not know at all. So I don't know about you guys, but this is when I freak out. Why? Because detours, what if they don't continue with the detour? What if I get lost? I don't know where I'm at. What if they continue with the detour and all of a sudden they're like, you know what? Sorry, the road is completely closed. You got to go home, and they don't show you how to get back to the highway going home again. What if you are just get completely lost and there's one sign that is misplaced? Oh, the point is your mind is in complete doubt, right? You have no idea where to go. Would you be taking trades during that moment? No, that's it. That's that indecision area. That's the consolidation area, right? So you don't really want to be taking trades in an area where you're uncertain. But all of a sudden, the construction worker brings you back from the detour to the highway and opens up and says, all right, you're free to go and head back. And now you are back on that highway, headed to your friend's house with full of confidence because you know exactly where you're at. That is that breakout trade. Okay, so that is what you have to understand, and that's where that renewed confidence is. Okay, you're heading north, detour. Oh my God, freak out. Where am I? Open the road again. Boom. All right, so this is that breakout trade. This is where I know where to enter. So for me, with these EMAs and my MACDs, first of all, this is right here, total breakout, right? We have this massive resistance, finally headed back north, and I get in. I use my EMA lines as a place to enter. Think of yourselves as archers. You know, like those archers that, like for instance, in the Olympic Games, we see archers, we watch them. They don't just walk around aimlessly on a field, right? They take they take their targets or their shoots from a specific area and they have a specific target, right? Traders, we have to have the same thing. You can't just go in blindly. And that's what amazes me even more. Even people who are studying with me still sometimes forget and just start saying to me, oh, but that was a strong candle. That means nothing, or a strong bar. No, you have to know exactly where you're entering. You have to have your order waiting. Okay, so another really important trade that is also super, super high probability is the transition trade, is the new trend trade, right? So again, you have a pretty strong resistance area, you have a strong area, but all of a sudden it transitions, it changes direction. This is when the MACDs are showing new strength. There is a lot of movement. This is when you could spot, and again, I take it from my EMA lines, right? So let's go back here. Again, making up a trader, daytrader.com. You can get the whole presentation there. Once again, making of a daytrader.com. And now let's go and have some fun in the live market. So to see how it is all done. So just so you guys see what I trade the ES Mini. And with the ES Mini is literally the S&P 500 index on the futures market. So it works a little bit differently because it is, you can see these little boxes here, these grids. It is done by point. We do not care about the price, and you will never be putting in the price, even if you're doing SPY, which is the ETF. you have to first put up like 300, almost $400, right? It's up to like 380 right now. You don't have to do that. So you can go in with points. You could even go in with ticks, which is 4 ticks to 1 point. You could literally start with $12.50 per trade, but I recommend at least going in for 1 point, which is here. And 1 point could literally come to you in seconds. And that's the beauty of it, right? So if you're going in with multiple contracts, like if you're going in with a 10 lot, that means you could go for 500, right, bucks in that same exact trade setup. So the other cool thing about ES Minis is that they are 6 days a week market. They only shut down for about 45 minutes to an hour weekly for maintenance. So they close at like 4:45 and reopen again at around 5:30, and you could trade all night. So right here, you can see this is a day break, but really it's not, because it closes at 4:45 and reopens still on the same day, but it's a whole new group of people. So we call it a day break or session break. So since I only really focus on the day trading, I will focus on just what is happening right now. I like to do my analysis before I get into anything. You have to also really be cognizant of the news and see if there's any news items coming up. So I can see here that there was a mini resistance area in the middle of the night. Doesn't really affect me that much. However, this certainly does, because for me, the market opens at 8:30 a.m. I am 1 hour behind Eastern. So this is where it opened up. There was a pretty significant support area that totally shifted the market. And then we had a pretty significant resistance area, and now it's headed down. Chances are, but I'm not predicting, however, just from years and years and years of experience, chances are it will hit and revisit this support area. What is it going to do here? I don't know, but I will be ready to see if it breaks out or if it goes back in. And this could be a beautiful trading channel, right? Okay, so hang on before I go anywhere. You guys have some questions? Oh, okay, so it's making of a daytrader.com. Hopefully you'll be able to get that. Oh, I see that somebody has responded, so thank you. At this point during the day, are we supposed to draw the support in areas? You should be putting in your support in areas before you sit down and all through the day, all the time. You never want to just be guessing, because guessing will kill you, right? Like here, what I'm showing you is that it will revisit this area. I could guarantee it. How much it's going to revisit, that's not for me to tell you. However, what it will show me, though, is that it could continue and go back into here, but I'm prepared knowing that this is an area because it's been visited 1, 2, 3, 4, 5, 6, 7 times it's been hit, right? So if it comes here and bounces around and goes down, I'm going to be looking for that breakout trade. But if it bounces around and goes back in, I'm going to be looking for that other trend trade. I don't go off the support area or resistance area. That's a dangerous play. I do not recommend anyone doing that. Okay, and just another really quick thing before wrapping up, because we have only a few minutes left. I don't know if you guys have noticed what I am using. I am using a tick chart. This is not, again, anything odd. A lot of people use tick charts. Literally what tick charts are, each bar, and you can see right here, ticks remaining, is telling me in real time the volume that is going on. It is 610 transactions per bar. So I am seeing the exact amount of people, it's not people, it's transactions happening in the moment. And at the end of the day, it's not about the amount of people that are in it, it's the amount of transactions that are going on, right? And you can see that the volatility is gorgeous. It's really, really great volatility, right? And that's the most important thing, is to see when there's volatility. Because during the day, right now we are in the morning session, you want to see that volatility. If it's a really, really slow, volatile day, at this time, it's boring, and that's when a lot more indecision can happen. However, if you are trading in the after hours or the pre-market, the volatility, you need to understand, is going to be a lot less, and that's okay, because it's just a lot less people. Okay, So hopefully that makes sense to you. So we can see that there is a channel forming. However, there is still a pretty decent trend moving down. And I would have been able to get into a couple of really powerful trades here on that change of direction, right? I'm aware of this area here. However, I don't want to be totally obsessing with it, but I do want to know that it's there, right? So it's here because it's hit it before. I know with the market that it visits and revisits areas. So I'm here aware. But however, in the meantime, I have quite a lot of room here to take some good, valid trades. Okay, guys, let me know if that makes any sense to you. And I'm going to start to wrap it up right now because we only have a few more minutes left. Okay, so now, wasn't that fun? Imagine if we could do this together every single week. And I'm super excited about this part of the presentation because it is what most traders can do to unlock what is holding them back. And do you guys know what that is? It is literally, how do you know if you are doing it right? How do you guys know if you're doing it right? The thing is, I can guarantee the majority of people here today are watching YouTube channels, reading different books, but it's all great if you start to implement. But how do you know if you're doing it right? Who is there to help you understand if you're doing it right? So let me break this down for you. I've made something really special for you. When you get this cheat sheet, when you get this worksheet that I made for you, you immediately get access to the exclusive VIP list that is going to be that you are the only ones going to be able to get access to. Remember, makingofaDayTrader.com. And I really want to encourage you to sign up for it because you will be getting a special invite coming into your inbox. And it only comes to the people who are live during this presentation, nobody else. And here's what I have for you. So many of you have asked me during presentations if I have a program. I normally don't like to really bring that up. However, I do have my signature program. It's called Simplifying Day Trading Futures. It is short, bite-sized videos, everything that we went through right now, really going into it and a lot more. And you can do it all from any device. If you're on your phone, computer, laptop, iPad, you will literally be in essence with me side by side. But again, I can only make the special invite to you once you sign up for makingofaDayTrader.com, and you will automatically get the free worksheet. And what I said before, how do you know if you're doing it right? So I don't want to just give you this information, right? I don't want that. I want to be sitting next to you and doing it with you. So as a special for the participants only, I am giving 6 months one-on-one membership. So remember, makingofaDayTrader.com, you'll get your free cheat sheet and it automatically registers you to the special list that only the people who registered will get. And on top of that, I want to give you this extra bonus, 6 months free membership into my live trade chat room, where you will literally be sitting with me, where I will be analyzing the market like what we just did, but for a long time, really going into the market, taking the live trade, where you'll be able to ask me live questions in the moment, really implementing. And so on top of the 6 months mentorship, you also get the 6 months free in this live chat room, which is now a really awesome, vibrant community of students. The thing is also, I don't know if you guys are in other chat rooms, the majority of them are all have moderators, people that the actual owners hire just to sit in there. That is not like that with me. It is me. I do not believe in hiring anybody. It is literally going to be me live implementing everything that I teach you guys, watching and asking questions and implementing it along with me. So you literally get more time with me. Okay. And because the program is so robust, I'm going to give you lifetime unlimited curriculum access. Now, I'm not releasing the price because I want to surprise you with the value of it, but what I can guarantee, it is literally less than the average price of a trade that you guys take. I know for a fact that it is literally less than your average trade. So one average trade and you will get this education that will completely revolutionize your trading with just me, the mentoring and the live chat room alone. I'm not even talking about the whole curriculum that you'll have access to. However, there is a catch, okay? I only have space for 25 students because my goal is, due to this one-on-one mentorship, I'm only able to focus on 25 students so that I can give you my full attention and my full commitment to your trading. Okay, so I only have space for 25 students. So make sure you sign up for the freebie right now so that you get put on that special list. Remember, when you get this free cheat sheet, you literally get put on that VIP list and you're eligible for the 6 months of free mentorship, one-on-one coaching. You get 6 months in the live trade chat room. You get full lifetime unlimited curriculum access to the futures course, and you get to chat with me and ask me questions all the time. Okay, guys? So let me know if you have any questions at all right now, and go to makingofadaytrader.com. All right, so in the meantime, I just want to go really quickly one more time into the market, and look at this, guys. Look at it. How close is it to revisiting this area? And this is fascinating because the market does this over and over again. But if you don't have your support area, your resistance area in there, how are you going to know this, right? So what if you decide that you want to continue going in short, yet you completely overlook the fact that it has been a very strong area that's been visited, and all of a sudden you start to get stopped out? What are you going to do? You're going to start moaning and groaning, oh my God, the market is against me. No, what you're going to realize is, wait a second, I'm not listening to what the market is telling me. And it talks to us, right? How long does it take to get the cheat sheet? Nicola, you should have received it right away once you signed up, like automatically. If not, please email me, thetraderchick@gmail.com, and I will send it to you again, but you should have been able to get it right away. Can you maybe check your spam box? That might be another place that it got to. If not, again, you guys, if you haven't gotten it, thetraderchick@gmail.com, and I will send it to you immediately. Okay, so guys, I'm pretty much out of time, and I really, really appreciate being here and hanging out with you guys. And I hope that this was helpful. And look at this. I love it. I actually think trading is like art, right? It's literally like a work of art. I just love it. It could be so interesting and fascinating, but you have to know what you're doing, right? Okay, guys, thank you again for being here. I really look forward to chatting with you. makingofadaytrader.com. And thank you, Anna, so much for having me. As always, it's been a true pleasure. Thank you.
Again, thank you for spending some time here with me today. I got about 45 minutes. I'm going to try to go through this fairly quickly. I'm going to go through some chart work at the end of this. I'm not going to sell you anything here today. I'm just going to talk to you about our market maker levels. Like I said, there'll be no sales at the end of this. We're just going to do a bit of discussion. I'm going to show you a little bit about the levels that we use to trade with every day. I'm going to show you some charts here. Like I said, I got about 45 minutes, so I'm going to get started. I'll answer all of your questions as we come through here at the end, if that's okay with you guys. So just go ahead and put the questions in there into the box, and I will make sure to get back to them as we go through it here. All right, so the title of my presentation today is Market Maker Levels, the Secret Trading Levels of a Veteran Forex Trader. So before I get started here, that's a real kind of marketing gimmicky kind of description, which I'm not, generally speaking, I'm not a huge fan of using secret or hidden or any of those kinds of things. And the only reason I use it here is because it was applicable. The guy that taught me these levels was literally a veteran floor trader, a guy who traded on the floor of the S&P pits for north of 30 years. And when he first started, showing me these levels, he was very secretive about them, right? He wouldn't tell me how they worked or why they worked or anything really about them. So what I would do is, we were sitting down to trade every day together. I would say, so where are these secret levels at today? And he would laugh, and we would talk about it. And so really, I don't like that gimmicky marketing kind of idea, but they really did have a kind of a reason why I call them the secret levels, because they were truly something he held close to the vest for a really long time. So anyway, let's move on. So just by way of quick introduction, that's me. My name is Jason Love, and I'm the founder and lead trader here at the Oil Trading Group, and that's me graduating from high school back in 1987. Geez, that's a long time ago. Shortly thereafter, that's a picture of me in the U.S. Navy in boot camp there, right? So 1988, that's a picture of me in the Great Lakes Naval Station. So if any of you that were in the Navy, you know that that's one of the boot camp depots. I am a combat veteran of Operation Desert Storm, and I did hold a top secret security clearance while in the Navy. And there I am a few short 30 years later. Again, we just recently celebrated, in fact, in October of 2020, we celebrated our 10-year anniversary of running the Oil Trading Group, right? So we spent 20 years, we spent 10 years doing this over this past decade. We've learned a lot, and we could talk some more about that at a different time. But really, the question that probably a lot of you are going to ask, and rightfully so, is, all right, so I see all these presentations, is what this guy is going to show me today, does it actually work? And so what we like to do in our trade room, and there's a lot of reasons why we do this, but one of the reasons that we do Top Step Trader Combines, and if you're not familiar with who Top Step Trader is, they are a service that will provide you with funding if you pass certain criteria, right? So they have account sizes that range with buying power anywhere from $30,000 up to $150,000 worth of buying power, right? They're not going to deposit that into your account, but they give you the ability, if you can pass their criteria, to use that as buying power for trading. And so we have kind of positioned ourselves. I've got a 19-year-old son who goes to the almost 20, who goes to the University of Oklahoma. And in prepping him for college, we had to go through these ACT and SAT prep exams, right? And so one of the things that we try to do, because there are traders that come to us that quite candidly are underfunded. And so this is a really good avenue for us to help traders get funded. It's also a really good way for me to kind of show you in a format that is common in the industry, to be able to show you that what we actually do does work. And so what you see here is a screenshot from our website, and also from what used to be on Top Step's website. But they basically came back and said, look, in 2018, there were 1,020 traders that were funded, and the fastest time in which it was done is 15 days. And so I took our group from 0 to a funded trading account in the minimum allowed time, which was 15 days. I then did a video where we talked, it's about an hour-long presentation. We talked about the techniques and the process that we went through, and that's a whole other topic for another time, but that is something that we did. Now, I do these, again, I will do these periodically throughout the time, because not everybody comes to us at the same time, and I want people to go through this process. And so what you see here is a list of previous trading combines that I have done in the past. Now, this is not an all-encompassing list, and I'm going to show you in just a few minutes. I'm going to show you why I say this is not an all-encompassing list. But what you'll notice here is going back into January 2015, and by the way, I was in the top 50 people that was funded originally at Top Step Trader when they started 9 years ago. So what you see here is that we had a Top Step Trader Combine that we started in January of 15, and then there's another one here in July of 19. I'm going to show you some more recent ones here in a few minutes. But what I really wanted to show you on this is the couple of statistics. There's an average winning trade, and then there's an average losing trade. My average winning trade is $421, and you divide that by the average losing trade of $119. My reward to risk ratio is about 3.5 to 1. So for every dollar that I put at risk, I'm generally speaking getting 3.5 to 1 reward to risk ratio on that. Also, you'll notice the average win duration. So if you strike out this really long hold time, I'm averaging about 15 minutes on my winning trades, and I am averaging about 5 minutes on my losing trades. So I'm about 3 to 1 holding on to my winners versus my losers. So that whole adage, cut the losing trades short, let the winning trades run, is really applicable for the way that we trade in our particular trade room. Also, you'll notice the win percentage is not, it's not like 90%, right? These are honest, real numbers. And the reason that I can be at some of those win percentage numbers is because our reward to risk is higher, right? It's also a pendulum. So if you want to have a really high win rate, typically speaking, you've got to have smaller targets. If you have a lower win rate, typically your targets are larger. And I'm telling you that today because I'm going to show you how we use these levels for entries, stops, and target locations, right? So we're going to talk about that as we go through it now. Also want you to look here at the largest losing day, right? It's not like I'm taking, quitting at $200 sometimes, right? I've had some large losing days in this process, but was still able to be successful in these trading combines because of the reward to risk ratio, which I'm going to show you these levels and how they work to allow us to achieve those bigger reward to risk ratios. All right, so back in October of 2020, just a few short months ago, we took a Top Step Trader Combine in front of our trade room. And of course, when you pass, they have everything's automated. So when you pass one of those combines, they send you out an automated letter like you see here today. Congratulations on passing the trading combine and reaching the funded level. Now, when you go through one of these combines with them, and I don't want to turn this into a Top Step Trader, really, they're called Top Step now, but I don't want to turn this into an advertisement necessarily for them. But one of the ways I do think it's important that you understand this. So when you go through the process, they have what they call a pro account and or a funded account. And so you have a choice, right? To either go the pro account or the premium funded account. And what I would tell you, if you're in the process of doing one of these, I would say always take the pro account, right? And the reason I say that is because they are incentivizing you through their process, and I'm not going to go through it all here, but they incentivize you to take that pro account approach versus the premium funded account. So that's what I did in this instance when we passed this trading account. So in October of 2020, we took the 50K step 2 process and went directly or went through that process to get to the funded account. Now, also what they did for us, and they beta tested with us, because we put a number of people through this program and we've done this a number of times with people, we actually, if you're not familiar with the process, there's usually 2 steps at Top Step to be able to get through. Well, we were the only person that they tested this program of skipping straight to step 2. So again, I'm not showing you step 1 because they allowed us to beta test this skips to straight to step 2 to funded account. And so this was a $50,000 trading account, and my objective here was to achieve $3,000 in profit, right, in a minimum of 10 trading days. And what you'll notice down here is that all the little check boxes are green. We had a profit of $3,100 in the minimum amount of time of 10 trading days, right? So that was went from the 50K step 2 directly to the funded account. Now, again, once you get into that pro account and you reach a $5,000 balance in that pro account, then they take that money and they move you over into what they call the premium funded account. So that's really where the live trading starts, right? So the other one's in the simulator still, but they're going to, if you pass, they're going to take that money, right? They're going to take that money that you made in the simulator, and then they're going to fund that money into a live account, right? And so once you make that 5K, they're going to put that into a live account. Well, here is the 50K pro account into the premium funded account. And you'll notice here that my total profit was $5,084. We did this in 4 trading days here, right? So we did that in 4 trading days. So we took that step 2 into a pro account. We took the pro account and then successfully moved it into the premium funded account. And here is the letter. Congratulations, you earned a premium funded account. We're thrilled, blah, 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 right? That's the letter that you get when you do that, right? And so again, the reason I'm showing you this is I want you to see that what I'm going to show you today works, right? And the levels that we use, it works to allow you to be able to do some of these things. Okay. So what I also did is I get a lot of requests to go through and do the bigger trading account. And so kind of on a parallel path, we took the 150K step 1 account as well. And the profit objective was $9,000, which we achieved. The trade minimum number of days is 5 days. You'll notice that we did complete this in 5 days, with a profit of just over $13,000 in that 5 trading days on the step 1 of the 150K account. We also took that same account and went from step 2 to the pro account. Again, you have to basically repeat the entire process, make $9,000, except this time you have to do it in the shortest time you have to do it in is 10 days. Well, you'll see down here that we did this in a minimum of 10 days, and the profit during that window was just about $12,400, a little less than that, right? And so that's the way that we did that. Now remember, my reward to risk ratios are 3.5 to 1, right? That's what allows me to take those winning trades and be able to maximize them into a way that you see here. So what I've just shown you in basically 1 calendar month, now the market was moving, and that's always good. But what I just showed you was a $36,902 worth of Top Step Trader from step 1 to a premium funded account. In that window of time, we were able to accomplish that using the process that I'm going to show you here today. But before I continue to go on here, I do want to show you this. I received this email and this screenshot from one of our free trial members. So I'm going to read to you what he says here. By the way, I passed the first step on phase 1 with Top Step with your trading methodology during my free trial over the past 4 days. If that wasn't worth every penny, I don't know what is. So basically, this person came in for our free trial, followed the trades, which again, he was in a simulated account, which is a Top Step Trader simulated account, so I'm okay with. I don't like people doing that until they've kind of learned the system, but he did it in his Top Step Trader simulated account, which is fine. And through that process, he earned $6,196 to allow him to progress on to the next step of funded trading. Now, it isn't just Top Step Trader that we've done. I also do the Earn to Trade program. And so just a quick story, Earn to Trade approached us a couple of years ago and said, hey, we would certainly like you to promote our product to your folks if that's possible. And I said, sure, I can do that. I said, but the first thing I got to do is I got to go through your process, see if I can do it myself. And then can I get paid? Will you pay me, right? So I had to put it through the process. I had to go through, trade it, do that whole process. And so we did that, right? And so what I ran a webinar that we titled From Start to a $5,000 Deposit, My Experience with a Proprietary Trading Firm. And the time that we did this, that was with Earn to Trade. And so what you can see here, maybe a little hard to see on this, but this is my Chase business account. And there you can see a $5,000 credit, and this is from Earn to Trade, right? So that's a $5,000 credit from Earn to Trade, going through the process that I'm going to show you here today. All right. One more thing, you may be saying to yourself, well, geez, Jason, you know, that sounds great. You picked a couple of months here where you did pretty good. How do we know, right? So I'm going to throw this link into the main chat window here. So I'm going to put this into the main chat window. Hopefully you guys can all see this, and that's to organizers and panelists only. So let me send it to all in the entire audience. So let me send that here. So this is a copy. This is that's a link to our YouTube channel, right? And so what you're going to see on this YouTube channel are literally hundreds of videos of me taking these types of trades using these levels in our day trading chat room, right? So I'm scrolling through here. There's literally 500 plus of these types of trades. In fact, the most recent one that I have posted was a $2,400 ES trade that we did on the 15th. So like we've won every day this week, but the markets, as you know, have been really sluggish. So I didn't have anything really to post in terms of kind of showing you how these levels work. Right, we had some decent days, and there just hasn't been anything really, a story to tell or anything to post. So the last one you see on here is this plus $2,400 ES trade that was a 12 to 1 reward to risk ratio, right? 12 to 1 reward to risk ratio, and you can take a look at that on the YouTube channel. And these are the levels, and I talk specifically about how and why. And then what you get to see here is you actually will get to see me enter into the trade, right? So let's come back over here, right? This is you're going to see me enter into the trade. I was down ticks as we entered into this trade. I show you where we entered off of this market maker level. You get to hear the commentary, and then you get to see the trade. I speed it up a little bit so that you can do it, but you get to see the trade as we went through it. So anyway, that's the YouTube channel, and you'll be able to take advantage of looking at that at your leisure. All right, so. And again, I apologize for going quickly here. I got about 25 more minutes, 28 more minutes, and I want to make sure we cover some of the high points here for sure. All right, so the government wants us to, make sure you understand that there are risks, large potential risks and large potential rewards in day trading. You must be aware of the risk and willing to accept them in order to invest in the futures and options markets. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. The Oil Trading Group, that's us. We do not hold ourselves out to be a commodity trading advisor. And so given this representation, all of the information provided to you by me here today is for educational purposes only and should not be considered specific investment advice. And of course, the hypothetical or simulated performance result disclaimer that you see there on the chart. If you'd like more information, make sure you visit the website and click on the tab that says government required disclaimers. All right. So enough of that. Let's talk about the market maker levels specifically. So what is a market maker, right? And so back in the day, a market maker was a high volume trader that literally made a market, right? By always having liquidity, providing liquidity and standing at the ready to buy or sell. They would profit on the bid-ask spread and then benefit the market by adding the liquidity. Now, this guy that you see here to the left, this was Patrick. Patrick was the floor trading mentor that used these levels and kind of learned or taught me, and I learned from, right? And that's him in a very, flamboyant pose there in the middle of a trading day, right? And so what the purpose of the floor traders were is they fulfilled an important role in the markets by providing liquidity and narrowing that bid-ask spread, right? So that there was not this huge gap in what was happening between the bid and the ask. And again, floor traders were also referred to as market makers, right? So they were actually referred to as market makers. Now, these levels were developed in the 1980s. They were, again, developed by my trading mentor, who, as we've talked about, is a 30-year veteran floor trader. In their original form, these levels were calculated by hand. And despite the changes in the way that trading is conducted today, electronically specifically, the logic for the levels continue to work in today's trading environment. So what are these levels? Well, as you know, the market is continuously telling a story, right? You've heard terms like it's a two-way auction process and all these kinds of things, right? The story that the market is telling provides you the context for the daily trading session. Now, the market maker levels are the structure points inside of that daily story, right? So the market's trying to tell you a story. And so what these levels do is they provide you with basically the chapters inside of the book, right? And we'll talk about that here again in just a moment. But once determined, these structure points are used as tactical areas to make trading decisions, also for your entries, stops, and target locations. All right, so why these levels work? Well, as you know, the markets do not move linearly in nature. The markets will rally and pull back, and the markets then pull back and rally. And what statistics will show us is that the market will be non-trending greater than 80% of the time. And so here is a profile chart of the CL, right? So again, let's see here, find the mouse here, all right? So here, the market sold off, and then it rallied, and then it sold off, and then it rallied, and then it sold off, and then it rallied. And the market continuously does that over and over and over again. And so again, to fully understand why these levels work, you got to understand that the market rotates, right? You have to understand that the auction process and how the markets go about discovering what fair prices are in any given day. So remember this, the market moves from horizontal development to vertical development and back to horizontal development, and then back to vertical development, right? It just continuously goes through this process. And so the sole purpose of the market is price discovery, right? The market will rotate within a range of prices until a variable changes, right? And I don't have time to tell you my cool Dirk Nowitzki story for all you NBA fans, but the market will change based on the data that's being put into the market. So for just really quickly, for example, let's say the market's fairly flat and rotational until there's some event, OPEC meeting or non-farm payroll report, and then the market will break out of that horizontal development and go into the vertical development until it finds buyers or sellers, and then it will drop or rally until it finds kind of an equilibrium, and the market continuously does that, right? And so here's why the levels work. The rotations, the rally, pullback, rally rotations create a set of measurements that are based upon time and price cycles from previous trading sessions. These measurements are then projected forward and become the structure points for the next day's trading session, right? So these, you probably heard the term harmonic rotations. Well, these are not harmonic rotations, but they are in tune and in sync with the way that the market moves, right? So again, previous day's data, previous time frame data, market rotates, and then those rotations create measurements that are projected forward into the next day's session. And because they are market driven based on market information, they are very, very accurate. And so I get asked this question. I get asked this question all the time, right? How do these relate to the floor trader pivots that are out there, right? Well, both sets of levels were developed and used by floor traders. However, there are some stark differences in how the price is measured and how the levels are calculated, right? Floor trader pivots, very basic formula here. Calculations are based upon averages of the high, low, and close. The pivot point is the high plus the low plus the close divided by 3, and that creates that kind of center band or support resistance idea on your chart. Now, the R1 or the resistance above and the support S1 below, they're calculated by 2 times the pivot minus the prior day low and high, and then the R2, R3, S2, and S3 have a calculation as well. Now, these measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it's occurring in real time. And I'm going to show you that here in a minute. Now, the market maker levels are calculations based upon measurements which were derived from time and price movement, right? So time is the key difference here. That's the key element, right? So the floor trader pivots take high, low, close, divide by 3, whatever, right? The market maker levels are taking a time component into consideration, and that allows these levels to evolve in real time to account for changes in the rotation and price discovery. There are 3 basic measurements that we look at here: the ETH, or the overnight or extended trading hours, the RTH, regular trading hours, and or the intraday trading session. So final thoughts here before we start looking at a few charts. These levels will continue to work because trading is based upon human emotion and groupthink. These levels take advantage of the process of continuous price discovery and provide structure for the daily trading sessions. So I'm going to show you a few chart examples. We're going to talk about the ETH, or the extended trading hours, also known as the Globex. These levels begin plotting at the close of the RTH, or what used to be known the pit session, and are valid until the close of the next day's session. The next set of levels we're going to look at are the RTH, or regular trading hour levels, and they are also known as the pit session. Now, these levels begin plotting at the open of the RTH session and conclude at the close of the RTH, or what used to be known as the pit close. All right, so let's take a look at some chart examples on here, and I'm not going to cherry pick. We're just going to use today's charts as an example, right? So we are the oil trading group, so we'll start here with an oil chart. All right, so I'm going to do this first of all. I'm just going to turn off. We have what we call a zone of influence here on the indicator, and that kind of gives you this kind of zone or range, right? Because support and resistance is not, as you know, is not about to the tick precision. It's generally more about a zone of influence or a range, right? And so here are the RTH session levels today on the CL, right? And so remember, one of the things that I told you is how we can get through these trading combines with these high reward to risk ratios is because of these levels. And now that I told you I was going to turn those off, I'm going to turn them back on so I can show you how to use those zones for stop placement. So we're going to go here. Okay, so on the CL as an example, we use 10 ticks on either side of the level as the zone of influence. So the zone is about 20 ticks wide on the CL. And so right here at the open today, right? Now, what I'm going to show you is not the way I would recommend to do it. I'm just going to take every one that comes down the road here, right? And so here's some delta. This is a filtering component that we use, but I'm not going to show you, I'm going to just show you how they work, taking every single trade that comes down the road here, right? That comes down the pipe. So market opens up, this level's formed up right at the open, and you get in right at that level at what is that, 52.81, right? And so your stop would be here just below this box at 70. Okay, so that's an 11 tick stop. Now you can take this level to the level right here, so that would have been an 11 tick stop, and that first opportunity was 25 ticks, so that's about 2.5 to 1 reward to risk ratio. But if you're using something like a filter like a delta here, and you see that the market, the delta was continuing to rally through it, you may have said to yourself, well, let me hang on to the level, to the next level and see what happens, right? So you carry this from here to that level, right? And that is 25 ticks. So that's 50 ticks. And you said to yourself, look, I'm just going to close and reverse. And again, I'm not advocating doing this, but you just said to yourself, I'm going to close and reverse. And there's your 10, 11 tick stop. You take 2 ticks of heat and you rode it all the way back to the other side at 50 ticks. And you said, okay, I'm going to do it again. And you have your 11 tick stop and you take it all the way back up to the level above, and there's 50 ticks. And now all of a sudden you've got 3, 5 to 1 reward to risk trades. And that is today's chart, right? I'm not even, right? And so if you said here, right, 31 to 42, the price here got to, the high there was on this bar was 41. So the stop would have missed you by a tick, and then you had another chance to come down to 25. I don't trade it like this. I'm just showing you what would happen if you did look at it like that. And that's just today's CL chart, right? So let's keep pushing back. Let's go back one more day here. Here's yesterday's trading session. All right, so small stops, big targets, right? So market opens up, you get short here, you get clipped up here at for 11 ticks. Okay, you get stopped for, whoops, let me change this here. You get stopped up here for 11 ticks. Okay, now the market comes back down into this level, and you said, I'm going to get long. And again, I'm not advocating you do this. You get long here at the level, the market rallies 9 ticks. That's enough to get safe. And so you get out at break even. The market comes back, pulls back into the level, and you say you're going to get short because you're just going to take every time it does something. There would have been a 10 tick stop, and then the market would have sold down here for 35 ticks. So that's a 3.5 to 1. Remember that number? That's a 3.5 to 1 reward to risk ratio. And you close and reverse, and you take your 11 tick stop, which doesn't get hit. And this time the market rallies here 23 ticks, and you decide to get out, right? You decide not to take your profit up here. Anyway, you get the picture, right? You said, I'm just going to let it take all the way down, take you out of break even, and maybe you took this stop here. But this, right, you took that stop there for 11 ticks. I know that says 15, but let's bring it up to 11 because that's 1 tick below the zone. And this time you said, okay, when it popped back up, pulled back in over the top of the level, I'm going to take it. And this time you said, look, if it gets up to this high, that's where I'm going to take it. Well, that's a 25 tick target right into the bottom of that zone, and then it sold off, and you get the picture, right? So that's what the CL looks like. But in those trades here, in these just 2 days, there was ample opportunity for your reward to risk ratios to be fantastic, right? And that's today and yesterday. So I'm going to show you this today. This is the ES. Okay, here's the ES chart. All right, so the market opens up, comes right into this level up here, right, at your RTH mid level, breaks down through this zone. Maybe that's what you took. That's 8 points. Your stop up here would have been 2.75. So that's a little bit better than 2 to 1. Market comes all the way down into the zone of influence here down at this RTH target, right? And then you rallies back up, and maybe you take this and you take the stop here for 3 points. So market pulls back, goes back into the level, doesn't give you a stop out there, comes all the way up to here. There's an 8-point move again, and market breaks down through, comes into it here, and gives you another chance all the way down for 8.25 points, and then it's still moving down to this level below, and that's today on the ES. All right, so let's take a look, peek back in here into yesterday, and this was a phenomenal move, right? And it was really, if you look here, right, look at the delta there, right? The delta is just all up here, right? So the buyers are just streaming in up here, and you get in, market pops, opens up right above this here. You have that 2.75 point stop. We'll just call it that 3-point stop. And the market rallies all the way to this high up there for 39 ES points. You actually ran out of levels yesterday, so that's where your revisions come in. This is when the market comes in and gives you real-time moves, right? Real-time adjustments here on the fly at these different points during the day, because you had extended past the previous day's range, and now the market will give you these revisions that you could come into here. But all the way up to this high was 39 points. Here, if you just took it off at that level, there's 28 points, 3-point stop, 28-point target. What is that? 7, 8, 9 to 1 reward to risk ratio, right? And that's the ES here. And I got just a couple of minutes here, so let me do this. Let's take a look here at everybody's favorite wild stepchild here, which is the NQ, right? So market opens up into this level, comes all, and I don't trade the NQ, so I don't know what good stops are, but there's 42 points on the NQ. And let's do this. Let's say that you got in here, right? Market breaks back over the top, and you decided to get in long here. That was a 14-point move below that line, and you said, well, maybe that's a stop out. I don't know, again, on the NQ, but then the market comes all the way up, and this time, if you wrote it level to level, there is 85 NQ points, and then it breaks back here and comes into the high up here, and I think this would not have probably stopped you out at 11 points, and then the market, you're in short still here, and the market goes into that level. That's 42 points with a potential additional 42.5 points. So there's, again, another potential for 85 NQ points and maybe one stop out, right? And so your 14-point stop out, then you had a potential for 85, and then 42 here if you took it out there, right? And I'm not, again, I don't advocate trading like this. I'm just showing you how you can use these locations with something that you already like to use to allow you to help filter in and filter out. And the biggest challenge that I've seen from most traders, the biggest challenge that I've seen is that they don't, it's not that their setups are necessarily bad, it's understanding how to get to a target, where the appropriate stop would be if the market's changing on you, and how to use a really good, solid reward to risk ratio to be able to help you manage your trades. Here's yesterday on the NQ, and of course, it's going to look really good. We'll turn on the overnight levels here. Now we'll turn those off. This one's going to look really good because it was trending well yesterday, but the NQ there gave you an opportunity for 170 points and literally no heat, right? What is that, a couple of ticks of heat right into that market maker level, and there was 170 points worth of opportunity. And I'm not cherry picking these guys. We're just rolling back through the charts here, taking every single thing that would come down the pipe. And so the last chart we'll look at here is gold, right? So this is gold. So today on gold, and again, I'm not a gold trader, but market opens up here, comes up here. That is, oh, I don't know how many ticks that is. 1.6. You guys will understand what that means. But then all the way down into that area for 9.5. So if you just said nothing else but 9.5 divided by 1.6, and again, I'm not a gold trader, that's a 6-to-1 reward to risk type ratio. And then as the market settles in and begins to settle in right around your level, right around that RTH signal level. All right, so as I promised you, as I'm going to wrap it up here, as I promised you, I am not going to be selling you anything today. I am going to offer you a 3-day free trial into our day trading chat room where you can go through and watch us trade these levels on a daily basis, right? So here is the link for that. I just threw that link in there so you can come in and watch us. No obligation, just come in, no credit card required. Just come in and watch us trade, right? Just come in and watch us trade with the on a free trial, and we'd love to have you come in and do that. So are they applicable to Forex is one of the questions that's in here. And by the way, I've gone through a lot of information, so please don't hesitate to ask questions here. They are not designed, have not been designed for Forex, and here's the reason why. These measurements have a particular anchor point, right? You remember me talking about an extended trading hours or ETH session or a regular trading hours RTH session, right? And so Forex doesn't have a start and stop time like those do. Now, with that being said, one of the things that I do is I don't just give you an indicator, right? I don't just give you the indicator. I actually teach you how to draw them manually, okay? And so why do I do that? Well, the reason that I do that is so, hey, you know, if I got hit by a bus, knock on wood, I won't, but if I got hit by a bus or NinjaTrader upgraded or Sierra Charts upgraded to some version and I decided that I don't want to be in the business anymore for whatever reason, right? I want to retire. I'm 52. I don't see that happening, but at some point I might retire. And if I did, and I wasn't there to develop the new indicator, well, then you're kind of SOL, right? You're kind of out of luck, right? So what I do is I teach you how to draw these levels as well. And so you can I say that to say this, they're not necessarily applicable to Forex, but you can, once you teach you how to draw them, you'll be able to play around with it and you can make them kind of fit your particular needs in whatever market that you're looking at, up to and including the Forex. So yes, these are available on Sierra Charts. Good question. These are available on Sierra Charts. We do NinjaTrader 7, NinjaTrader 8, and also on Sierra Charts. And with that comes more education, right? We have, if you come into the free trial and you take a look, you say, yeah, I'm interested in doing that. I have about 10 hours worth of video training on not only how to draw and use the levels, but how to determine the structure and the direction of the market and all of these different things that we like to look at on a day in and day out basis, right? And so there's a 100-page manual on all of the trading methodology, not just the market maker levels. We talk about the overall structure, the story the market's trying to tell, and the context and all of those kinds of things. Would you suggest a minimum dollar amount in a live account? I can't, right? There's a regulatory line between providing general information and specific trading information, like what account size to have. So I really can't do that, but here's what I can tell you. Go out and take a look, do an internet search, and what the standard norm, if you will, without getting into super complicated discussion on other ways to manage risk, 2%. You don't want to lose more than 2% of your trading count in any one particular trading day. So if you have a $10,000 account, you don't want to lose more than $200 in a particular trading day, right? And that will be the best way to keep you alive. But specifically, I can't give you a number. My apologies for being obstinate, but on that. Again, same thing, answer on the Forex question. You can take that information and manipulate it to do that, but they weren't specifically designed for stocks. These were done for futures by a futures floor trader. So anyway, hopefully that makes sense. And well, thank you for showing up here today. Well, that concludes my time here today. I dismounted. I'm sorry if it sounded rushed. There's somebody else in queue waiting to present here today. So my apologies if it seemed a little rushed. Make sure you come in, sign up for that free trial, come in and take a look around. We'd be happy to have you in, taking a look at what we do.
Okay, so let's begin. Live market analysis using supply and demand. Here's me giving this presentation, similar to this one at the New York Traders Expo not so long ago. And again, a quick disclaimer before we get into the details here. Here's a little bit about me for those of you who are here for the first time. I've been trading professionally for over 15 years, probably 16 years now, since we just hit 2021. And I started my professional life at Credit Suisse in London and New York. Okay, so for those of you who are hearing me for the first time, TradeSmart is a trading education business, and we focus on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. Here's what we're going to cover today. Why am I always wrong? Very important. Professional chart reading. Again, you won't find this in any book. We're going to cover supply and demand, and then we're going to jump into the live market, and we're going to use what I've taught you to analyze the current markets now. And then if there's time, what I'll do is go over how you need to prepare for success in 2021. As in, we're at the beginning of the year, pretty much almost finished January, but you've still got time to kind of look at where you are and where you need to go, and we'll cover that, and then we'll open up to audience questions and answers. I'll also share with you how you can take the next step if this is for you. So here's the problem, and again, many people can relate to this. Okay, so the market looks something like this, and you begin trading and you learn about maybe an uptrend. So you think, okay, the market's moving to the upside over here, and using moving averages, and you take your first trade and you're like, yay, it's going in my favor. You've got your maybe $10,000 account you're starting out with, and you're risking, I don't know, say $200-300 on the trade, and it starts to move up in your favor, and all of a sudden it starts moving to the downside, and it comes down here. You look at your screen, you see your P&L getting negative. You're down about $500-600, and you can't take it anymore, so you close the trade and you think, got it wrong, I've got to make that money back, what am I going to do? So you double up on the short side. I got the direction wrong. It's going down, not up. So what do I do now? I double up, I sell. I'm trying to make that money back. That's how you're feeling inside. I'm going to make that money back. The market took that money from me. I'm going to make it back. I go short, double, and it goes down. You think, great, I'm making it back. Your P&L's getting, less negative. You're making a bit on this trade, and all of a sudden the market turns around and goes over here, and you take your second losing trade, and you think, oh my. Now you think, okay, I got it wrong. It's really going up. So you take your third trade on the long side over here, and you go even bigger, and this one goes up in your favor and then turns against you, and you take your third losing trade. Anyone relate? Now, this is where it gets even cleverer. So you decide, hey, supply and demand, support, you learn something about support and resistance. You're like, okay, let's put support and resistance in. Okay, if you join the highs and join the lows, well, every time it comes up here, it goes down, and every time it comes down here, it goes up. So you think, okay, great, I've got this now. I'm going to go all out on this last trade because it's got to work. I figured it out. I'm doing it backwards. So you take your fourth trade over here on the sell side, and all of a sudden, what happens? The market doesn't go down, it goes up, and you take your fourth losing trade over here, and you've just wiped out your $10,000 account. And you're thinking, what on earth am I going to tell my spouse? What am I going to tell my husband, my wife? I've just blown away $10,000 in one day of trading, and I thought this was easy. It looks pretty easy, yeah? I read a few books and, try to put it together. It's so easy. You just click a button and you're in the trade, and then you click one and you're out. And, oh dear. Just type yes in the room if you can relate to that, if that was you, or that is you right now. Yeah, can you relate to that? Was that you at some point in time? Yes, that's right. Trader saying yes. Thomas, yes, yes, yes. Hell yes. Okay, so we can relate. Again, I was the original counter indicator on my first trading floor I ever traded on. There were two traders who were every single day up between $2,000 and $10,000 within the first half an hour to an hour open of the New York Stock Exchange. I used to trade New York Stock Exchange stocks. We traded a specialist system, and what happened was I used to call out a stock. For example, AMR or Continental Airlines, CAL, or whatever it was, IBM. And I'd say I'm going long. So I'd take a long. And then I'd walk past these two traders and I found, they were on the short side. I just looked over their shoulders and whatever trade I called out, they used to take the opposite. And they would make money and I would lose money. I was the counter indicator because most of the time, beginning traders usually do the wrong thing. They're usually on the wrong side of the market. And this is probably what it feels like. You buy when you should be selling, sell when you should be buying, and that's most of us. Okay? That's how most people's journeys begin. Now, what you need to do is learn about something called supply and demand. This is kind of supply up here, and sometimes it becomes demand, and this is demand down here. So let's go over what you need in order to read a market professionally. This is professional chart reading. You only need, in my opinion, three things. You need to understand trend, that's pivot analysis. And I'm going to share with you how at the end of this session, how you can actually do that training and actually come into our trading community and trading room and watch us do it live every day. Okay? You need to understand supply and demand. That's where trends begin and end. And you need to understand what price direction is, as in what direction is price currently moving in. For example, is it moving up or down? It's very simple. It's binary. It's up or down. Price can't be going, it's either moving up or moving down. It could be going sideways, but still, it's going to, you're not so interested in the sideways. Eventually, it's going to go up or down. And then you need to understand how to do that on multiple time frames. Again, this is a framework that you can use to read any market. Remember, there's three things on a backdrop of multiple time frame analysis. And I believe this, if you look down here, the charts will teach you all you need to know once you have a framework for reading them. This is that framework. It relies on three things: understanding the trend, understanding supply and demand, and understanding what direction price is moving in. Imagine if you have a table or a storm and it has one leg, it can fall over. Two legs still can fall over. Three legs, it becomes solid. When you approach your analysis of the market from three different vantage points and you match them all together so they line up, I'm going to show you how to do this, then you have a huge advantage over anyone else. And again, this is based on price action alone. Price alone, no need for any indicators. And it works on every time frame, any market, as long as you can chart it using Japanese candlesticks. The plain type of Japanese candlesticks. You don't need to get clever with them. I know there's other variations of Japanese candlesticks like Heikin-Ashi. You don't need that. Just a regular Japanese candlesticks, open, low, high, and close. So once you have that framework, you don't need to rely on any gurus, any signal service, or anything else. You can rely on yourself. And once you understand how to do that, the market is going to be your teacher. You don't need anyone else. Wouldn't that be a good thing? To learn something once, that's going to work, and you never have to learn anything else again. Now, let me take you back to my beginning career as a trader. So I was sitting on the trading floor, and we were taught to trade the New York Stock Exchange specialist system. The specialist is the ultimate day trader who sits on the floor of the New York Stock Exchange or stands, and they see all the order flow. And our job, what I was taught, was to analyze or understand what they were doing. And if they were buying, we would buy. If they were selling, we would sell. And we were taught how to read the time and sales and the prints going off on the time and sales, as in reading the tape, in order to identify what the specialist was doing. Because the specialist had more information than we did. If we could spot what the specialist was doing, then we could do the same. And that's exactly what we did. Until one day, the New York Stock Exchange went hybrid, part computer, part human, and what we were taught to do no longer worked. So the edge we had no longer worked. So it was back to the drawing board. So wouldn't it be a good idea to learn one thing, specialize in it, become an expert in it, and actually use it every day to analyze the market and actually build your own trading system? with your own strategies that fit your personality and lifestyle and never have to rely on anyone else again. Wouldn't that be a good thing to do? Well, this is it. So let's go back to basics. Everyone knows these two candlesticks. I'm assuming everyone here is not a complete beginner. This is a hammer and shooting star. So let me ask you a question and answer this carefully. Let's focus in on this candlestick. Is this candlestick bullish or bearish? Now type it in the chat area. Everyone answer now. Okay, is this candlestick bullish or bearish? Just type it in the room. Okay, I'm the only one that can see this, I guess. Okay, bullish or bearish? We've got bearish. Okay, come on everyone participate. Focus on what we're doing here, turn off everything else, you'll get the most out of it. Okay, James says bullish. Okay, that's a good answer there by trade. It depends on where it is. Yep. We've got bullish, we've got bearish, depends on, yeah. So the answer is it depends. Yeah. Generally, we're taught that this candlestick is bearish, and if it's in the context of a downtrend, for example, after a move up into a supply area and you see a candlestick like this, it probably means the market's going to continue moving down. And likewise, this is a bullish candlestick under the circumstances of a bullish market, an upward moving market, maybe a pullback to a demand area. So let's take a look. Let's answer this. So we have an upward moving market. Well, we have a 1, 2, 3, 4, 5, 6 bars up, and then we see a candlestick like this. Is this a bearish bar? You can type it in the room, yes or no. Just type yes or no. Y or N. Just type a Y or N in the chat area. Is this a bullish candlestick? Okay, in this scenario, is this bullish or bearish? I'm going to show you based on the framework we just went through how to actually answer this question. There's a definite answer there. Thomas, you got that right? Trader? Maybe. So I asked this question to a group of traders, to a whole room of traders at the New York Traders Expo, and almost everyone got it wrong. So most people think this. Let's have a look. Let's see what happens here. So this is a trade that actually happened in 2018 in our trading room, and I'll tell you what exactly we did and the reason I'm taking it step by step because it's a trade we actually took. So we saw this and we're thinking differently to what most of you are thinking, and you can see what happens over here. So this candlestick actually is bullish because look what happens. We continue moving higher, and when most people see this candlestick they think down, but what exactly happens here? We go up. When this happened in our trading room, I said this candlestick's bullish, you want to be on the buy side, and we're looking for target 1, target 2. This was the first supply area over here, and you can see it went down and then pushed up higher. Now, how does that work? Why? Now let's go back to the three ways of, and this is just on one time frame. 3 questions we need to ask ourselves. What's the trend here? Well, we're moving up. It's an upward moving market. Okay, so from a trend perspective, we're moving higher, therefore we should be on the buy side. Now let's have a look at in terms of supply and demand. This candlestick just went above supply. The next supply area is here, so that's where it's going next, and that's where we had the move down, and then up to the next level. So from a supply-demand perspective, there's no supply here, so it should go higher. Markets can only move down when there's more supply than demand. And here we cleared above a supply area, so there's no real supply until the next level, and you need to know how to find those levels as well. And the next reason why it went up is because we asked ourselves price direction without going into the reasons or how to actually understand price direction, but basically price direction is up here. So the direction of price is moving to the upside. And again, you won't find this in any book on technical analysis or anything like that, okay? But this one thing called price direction is the only thing you need, and basically every single candlestick pattern that you can learn, you can throw it out. You don't need it anymore. You've got to learn one thing and it takes care of everything. Someone came to me once with a whole group of different candlestick formations. I mean, I read all the books as well, like many years ago. The books that Steve Neeson put out, yeah, on Japanese candlesticks. And basically, if you go through every single formation and you just ask yourself one question, is price direction up or down? It takes care of everything. You only have to learn one thing. It makes it much easier. And much easier when it comes to making decisions about what the market's doing. So price direction here is up, trend is moving to the upside, and we're above supply, and we've got room to move to the next supply level. So no reason to sell, all the reasons to buy, and the market moves higher. That makes sense? You're saying, oh, right, trader, 4 years, and I've never read this or been told this. Thank you so much. You're very welcome. And you know, I've had people that have been trading 35 years and have never heard this before. And again, it's a game changer once you learn it and you realize once all those smoke screens of complexity, which it's not. If you think about what price does in any market, it can only move up or down. What's so complex about that? It's not. The world tried to make it complex when it's not complex, and with smoke screens and everything, but it really isn't. Once you get it down to the basics of what really is happening, price is moving up or down. Learn to read price and you'll understand what's happening in the market. You can put whatever indicators you want on. I've tried everything, well, a lot of things at the beginning, and then I removed everything. You can see one indicator here, CCI, and I use that for only one type of trading, probably 1% of the time. So supply and demand. What is supply and demand and why is it so important? So prices always move higher when there's more demand than supply. Prices move lower when there's more supply than demand, and likewise prices move sideways where supply and demand are in equilibrium. Okay, that's it. There has to be, more willing buy orders at a certain price level for price to rise. Just imagine you want to buy something at a certain price and there's only a limited stock at that price. Once that stock's gone and you still want to buy, then you're going to have to go up to the next price. That's how prices rise in a moving market, because there's no more supply at a certain price level. So if you want to buy it, you're going to have to buy the next price up. And likewise the other way around, if there's a lot of supply and no willing buyers at a certain price level, the sellers will have to drop their prices down until they meet with a willing buyer at that price. Remember, you can't say there's more buying ever going on than selling, or more selling than buying. If you look at every order, if you look at the time and sales and the prints going off, every order is a buy and a sell. Someone bought and someone sold. There can never be more buying going on than selling. What they mean is the more willing buyers going on. There's more people that want to buy at a certain price level than there's available stock, for example, of anything. Yeah. So what moves markets? Well, the real answer to that is supply and demand, without going into the details of what causes supply and demand imbalances. It could be news, could be geopolitical events, it could be anything. It doesn't matter what's causing the imbalance and the movement. If you can read what's going on the chart, it doesn't matter the reason why. I was always taught as a trader from one of many of the trading mentors I've had over the years that if you're asking the question why when you're in a trade, why is this happening? Good news came out and I'm buying and it's going down. Oh dear. So what do? You keep buying? The market's going down. That's bad. Good news came out. It's got to turn. No, it doesn't. The market's going down. So sometimes there could be good news and the market goes up, good news and the market goes down. That's what I found. I spent many hours looking into fundamentals originally, and I found I never really had an edge in the fundamental side of things, so I kind of scrapped that after doing it for about 4 or 5 years. And I decided, instead of focusing on trying to figure out which way price is going to go, just read the market and it will tell you which way price is going to go once you understand how to read it. And this analysis we've used to pick the top and the bottom last year of the market in March, the equity market. We picked the top, we knew it was going down, and we picked the bottom when everyone else was saying it's bad, everything's down, there was opportunity. And once you know how to figure out that the market has stopped going down, that's the time to start buying again, especially when prices are cheap. Okay? And you know what the beauty of this is? As I said before, you'll never have to learn anything else, because supply and demand are here forever. It will never change. It's been around since the beginning of time, and it will be here till the end of time. And these are one of the fundamental kind of understandings of how anything moves in any market. Any price movement is because of supply and demand. If you want to get involved in the fundamentals of why there is imbalances or why price is moving, that's great. But one thing I can tell you is this: if great news comes out and the stock market is closed, the stock's not going to move one iota, because it's people that move the market, not the news. People's reaction to the news. So we can read the reaction to people in the market, which is how price is moving, price action. Then we don't need to know the reasons why behind it. So your job really is to identify supply and demand on a chart. So how do we do that? Yeah, there's a question here. Doesn't the market feed on news? It could do, but I found, there was never, sometimes what's going to happen on good news, the market will go down first. And sometimes it will continue going down. You might not be privy to all the news that's available. For example, there may be other things going on that you don't know about. But one thing that you do know is you look at price, that contains, as far as, everything, price is king. Price is price. Doesn't matter why the price is the way or where it is, yeah? if you know this is the price and the market's moving up, then you want to buy moves to the downside, yeah, if you can figure that out. Okay, so supply and demand. I'll answer some questions at the end. So you've got markets moving down, so you want to look for areas in the chart where you have big moves, primarily big moves beginning, and where the market turns from down to up, that's usually demand. And over here where you see the market moving from the upside to the downside is supply. Now, not all supply and demand are equal. It will take me quite some time to take you through every single type of supply and demand there is, and how to look at them and how to understand whether price is going to turn or break through. We know how to do that with a high degree of accuracy, so that when you're trading in the market, you can know when price, as we saw the original picture that I put up, whether price is going to turn or whether price is going to break through. So what I'm going to share with you now is how to identify high probability turning points in the market. Now again, this knowledge that I'm sharing with you is based on over 16 years of doing this, okay? And my early years, I spent day and night trying to figure this out, and failed miserably, or as I said before, failed my way to success. I figured out every way not to do it, and looked at all different levels, what I thought was supply and demand, and sometimes they worked and sometimes they didn't, to get it down to a high degree of accuracy where I knew exactly why markets would turn at certain levels and why they wouldn't, and what I needed to look for. Again, doing this for many, many years and many hours every day until I got it, until I figured it out, okay? So it's based on many, many years of experience doing this. So what I'm sharing with you today is, it may sound simple, but it's a masterful simplicity after going through this hard journey to get there. So you can kind of piggyback off 16 years of work and just get the end results, if you see what I mean. So what I'm going to do is reveal to you now how to go about doing it. Not everything, but some things to think about that you can actually start to put into practice tomorrow in your trading, or today if you want. There is a caveat. It's a good idea to go through our complete trading program, but it also depends on how you learn. Some people learn best by watching, and you can come and join our live trading room as well. I'm going to share with you how you can do that for free at the end of this session. So who's ready to jump into the live markets? And we're going to have a look at some of the charts now. Just type a yes in the room if you guys are ready, and we're going to jump into the live markets. Thanks, James. So let's do it. So I'm going to pull up the charts, and let's start with the dollar. Okay, it's the dollar index, and what I'm going to do is share with you something pretty interesting here. And you can see this is the monthly chart. You can see this is an area of supply because this is where the market's dropped down from. Look what happened. This was last year when the market ran up here, and then we changed direction here to the downside from supply. We sold. And then this move up was sold as well, which is exactly how we played it, down to where we are now. Now we're in demand levels, and you can see the market so far this year, we're in January, started to move up from this level. And you can see what happened also here and here, we moved up. Now, the thing is, once you know how to read trend, we're still in a downward moving market here and a downward moving market here, but here we change trends, okay? And if you're looking at supply and demand, you look at these levels that we have marked out, this is exactly where the market turned down from, and then we went up and turned down again, and this is where the market's today is moving up from. We've got supply here and demand down here. And this is kind of where we are at the moment, so on the daily chart. And we have intraday levels as well, like yesterday, for example. The market ran up to this level of supply where we dropped down, and look, it reversed here and came all the way down to where we are now, to this demand level. If you look left, this is where we moved up from. So looking at where moves begin and end will give you a great idea as to where demand and supply are, or where the market's going to turn. Remember, there's a saying in the trend is your friend until the bend in the end. Markets begin and end. This is a downtrend. This ended the downtrend on the daily chart over here when we moved up. Okay, where did that happen? That happened in demand. If that makes sense. Okay, so let's have a look at a few other markets. Look at Bitcoin futures, very interesting. Bitcoin, it's been going down today. Now, we called almost every single move of Bitcoin. Let me show you on the monthly chart. Every single move from the beginning, the move down to here, where we actually played on the long side. This set up a demand. You don't know this until it happens. Yeah. Well, you have one way using price direction. The direction changes down here to up. and then we're pointing to the upside. So when price comes back down here, that was our first kind of buy this was in last year, yeah, down here. That was our first buy based on this time in demand. We came right back down to where we took off from. This is the demand level. Second buy was here around the 10,000 mark. This is bigger time frame buy, and now we reached the top, and we were targeting before the end of the year around 3,000. We got almost there. 30,000, I'm sorry, 30,000. Okay, we got just shy of 30,000 before the end of the year. That was our target for 2020. And you can see we shot up now, and it looks like we kind of got we've kind of changed trends here now. Failed to make a new high here, and now we're coming down to these levels, which is demand. And we just made a new low. So this may end up with a sideways, we might end up with a sideways market. This is supply now, and this is demand. So price is starting to move up again as we hit demand. You have to know where those levels are, and again, they're on multiple time frames. You can see the market starting to stabilize a little bit in this level. Let's have a look at a few other markets. Let's look at the E-minis. Shall view on the S&P 500. Okay, again, very bullish market, and we may have a move down today. Actually, it looks like we may have a little bit of a pullback. Yesterday we were on the long side, and you notice we went above this area. This set up a supply area, but we're in a bullish market on the bigger time frames. And you can see again, once you know where these levels are, look where the market stopped. This is demand. Look where the market stopped here and here. You know ahead of that. Again, I don't put these levels on after it's happened, because that wouldn't help you. You put it here and you're waiting for the market to come down for a buy, and it came down again, and then it moved up. And again, every single time we had that. Now, if you understand trend, you can kind of figure out that the market bottoms over here, not on this time frame, on the daily chart. The trend changed down in these levels. Notice where we came down to on the monthly chart. Came down to, this is demand. That's where the market stopped. Pandemic, market stopped, trend changed on the daily chart, and we went long, and we said it's going to probably take out the highs, which was what the move was last year. And this is the biggest up move in the history of the stock market, basically. And this is also the biggest down move in the shortest amount of time. And then we're having a good start to this year as well so far. All right, let's look at gold. Okay, again, once you understand supply and demand, you realize if we go take it from the top down, this is supply. Notice what happened when price came up to this level. Most people, if you look at this, you won't see this as a supply area. But look what happened when price came here, and you see it on the small time. Look, big drop down, which is this area here. That's supply. This is demand. So what's the market doing from this area? We're bouncing back again. And we said this yesterday. We're probably going to go on the long side yesterday. Which, why? Yeah. And we broke above this supply, which we said was likely to happen. So you want to look, if we go down to a daily chart here, you want to look at where you get big moves down. This move started here. We've got another supply level here. We haven't gone there yet. Look what happened when price came here and came here. Two beautiful trades down, another one over here. This is demand. Look where price stopped. The indicator on the bottom is CCI, Commodity Channel Index. Again, you can go to my website. I have actually a training, or send me an email, simon@tradesmartforex.com, and I'll share with you a presentation on how to use it. Again, we use it slightly differently and explain exactly why and how to use it. It can actually help you time your entries better if you're not good at doing that. Okay, so let's have a look at one more market over here. And let's look at oil. Again, you see the levels we have. We have a demand level here, supply level here. Look what happened from this level. Yeah, so supply, and this is where we're probably heading back to. That's what it looks like. And now, on the daily chart, we're trapped between demand and supply, which sets up for choppy. When you've got supply and demand levels very close by, you end up chopping around. And this is exactly the type of market we have at the moment, very choppy. But this is opportunity, taking the moves up. And you see we're in supply here. If you look at this level, if you look left, why is this supply? Because this is where we had a big drop down. Okay, and we also put in the bottom here by changing trend when that was the day, if everyone remembers that day last year. We've had a lot of interesting days in 2020 where we saw oil futures reach minus $37. You guys remember that? Just type a yes in the room if you remember that. I remember that day very well. And we kind of bought it off the bottom actually. Once we knew it was the bottom, and again, you use the trend to do that. And I'm going to teach you how to do that in the training later on. If you take the training, I'll teach you exactly how to do that, how to pick bottoms and pick tops, and especially if they're in areas of supply and demand. But this was at all-time lows. How do you figure out it's the bottom? Well, you have to learn how to do that. Once you know how to read the trend properly, not using moving averages, using price action alone, using the candlesticks, that's it, no indicators. The price will tell you when it stopped moving down and possibly the start of the move up. Let's go into preparing for 2021 or preparing for success in the beginning of any year or beginning of any moment in time you pick. It doesn't have to be the beginning of a year. So this is what you need to do, okay? You need to review your trading plan for 2020, last year's trading plan, okay? Now, let me ask you a question. How many of you can just type a yes or no in the chat area. How many of you actually have a trading plan? Okay, you need a trading plan. Okay, so if you don't have a trading plan, it's probably a good idea to stop trading until you actually build one, until you write yourself one. Then what you want to do, I'm assuming you have one, you've got to view your trade log of the whole year. And you also want to review your trading journal. Now these are the three things that you need in your framework as a trader. You need a plan, log, and a journal. And you want to ask yourself a question, where did I succeed? What did I do good at in 2020? Where did I succeed? You also want to ask the question, what do I still need to work on? What were my problems in last year? What did I do right? What did I do wrong? And then you want to start planning for 2021 with that background. And your plan should be to do what you succeeded at again and stop doing, what's not working for you, or figure out how to improve on it and make it work for you. It's very simple, but how many people do that? And what you want to do, it's an exercise I learned from one of my, business mentors, is this. What you want to do is cast yourself forward now to the end of 2021. You're now sitting at the beginning of 2022, January 2022, looking backwards at 2021. It was the best year of your life. You're looking backwards at a year. What did it look like? What did you do? What did you achieve? Now plan. Now plan your year. Looking backwards as if it's happened and what you wanted to achieve. Did you achieve it? How are you feeling about it? Where are you now? Are you making money successfully as a trader? Or have you made the transformation? Or are you like a trader that came to me? I don't know if he's here now. I feel, my heart goes out to him. 50 years of trading. I think he's in his 70s now. 50 years of trading. He tells me, Simon, I've traded every year for the past 50 years. I said to him, are you a successful trader? And then, he's like, well, I made a bit, lost a bit, but not really. But I got 50 years in the market. I enjoyed every moment of it. So I listened to what he told me, and I said to him, do you have a trading plan? Well, I know what I'm doing, kind of, yeah. I've got good reading and whatever. So I said to him, not going to mention his name, I said to him, listen, you don't have 50 years of experience in the market. You've got 1 year of experience, and you repeated that year 50 times. Now, if any of you are in that situation, and I certainly was at the beginning, it was going round in circles, going nowhere. And I wanted to get out of that rut. So you need to change something. You need to have a handle on what you're doing and what you need to change. You need to know what's working for you, what isn't, and you need to make the change. Okay, you need to look inside yourself. Yeah, everything you need is within inside yourself. You need to become the best person that you can be and figure out what it is that you're doing right and wrong. If you don't know how to read the market and you don't have a trading plan, then that's what you need to do. Learn how to read a market. Don't rely on gurus. Rely on yourself. Don't follow people. Don't follow me. Learn from me. Learn how to do it yourself. Okay, as a trader, you need to make your own decisions. Don't look for the next best tip. Never invest in anything you don't understand yourself. Imagine what it would be like if you could trade, if you could look at the market and you could trade and have a good understanding of what you're doing and why it's and why you're doing it, because you understand what you're looking at. It's a bit like if you're driving and you understand how to read the road conditions and driving conditions, and you adjust yourself, and sometimes you can anticipate when you're a good driver. Listen, I was in an accident a number of years ago, and a car, as I was turning left, overtook me on the other side of the road and went straight into the side of the car. So I'm very aware now when I'm turning left, even if I'm crossing over to the other side of the road, I'm looking in my wing mirrors, and I'm very aware of someone that may be because of having an accident. Someone rode into me. So it makes you much more aware. Falling down gives you that awareness that you need, that you may not have. So embrace failure as a stepping stone to success. If you learn from it, it's not a failure, it's just a stepping stone to success. It's a pathway that you need to go down. You're never going to get to success in a straight, as I said before, in a straight road, but you need to give yourself the best tools. I've spent 16 years in the market, every single day, over 15 years. I'm sure exactly the time, but 16 years. Every single day. In my early years, I spent hours, day and night. You can ask my wife, yeah? I literally was living in front of a screen, or a number of screens. And again, I worked in an office, not a home, and then I moved to a home office as well when the internet got a bit better. But in those days, the internet was dial-up connections. It wasn't as good as it is now, And nowadays, it's much easier to learn. I didn't have access to the people that you do, all the information. Sometimes it's information overload. There's too much information. So this is what's really important. You need to focus. You need to focus on what's important. And I believe that you need to learn how to read the charts. And then from there, develop your own trading strategy, your own trading plan that fits you. Don't take someone else's. It may not fit you, much like you're not going to take someone else's clothes and try and fit them. The only way it's going to work if you're the same size, but how are two people the same size? No. Just as our faces are different, so too are our personalities. We might be similar, but no two people are exactly the same. So you need to tailor make something to fit you. And I believe that's one of the main reasons why people fail. Nothing to do with not having money. I've had people that have built up, as I said to you, from small amounts of money to large. If you know how to trade successfully, then you can trade a small account, a big account, doesn't matter. It's just about understanding, learning how to manage risk of more money. But once you know you make money consistently, what difference does it make if you're risking $100 on a trade or $1,000 on a trade? You're doing the same thing. I mean, okay. In the equity market, it's slightly different. To put bigger size on, you can't just get in one click. You need to ease into positions and ease out. But in the Forex market, in the futures market, you can put a number of contracts on and the market won't even know that you're there. You don't have to change the way you do it. It makes it much easier. There's so much liquidity there, especially in the Forex market. You can put on $1 million position in one click and it won't make a difference. You can't put on 1 million shares in and people don't know that you're there, if you see what I mean. So there is a slight difference between markets. Okay, so let me share with you now trader success story. Jane's here. I'm going to switch on the chat so everyone can actually see each other's chat now. And just in case you, let's have a look how to do that. Let me enable it. Let me make it all public. So the chat's now public. Everyone, every time you type now, everyone can see. Okay. So Jane, say hello. Jane's actually in the room. I think she's still here. And this is her. So Jane came to me about 3 years ago, and basically she came to me without knowing anything much about trading and went from beginner to consistent profits in 3 months. Okay, 3 months. She didn't know anything. It's much easier sometimes to train a beginning trader without any prior knowledge than it is someone who has a lot of years of experience, because information overload is too much. If you learn just what you need to know, and you're able to practice that and not anything else superfluous, which is most of the time useless information, it weighs you down. It's baggage. You don't need that. You want to travel as light as possible to make decisions as quickly as possible and as accurately as possible. And repeat. So Jane did the training, yeah. And this is what she said. I mean, Jane's. Again, I'm going to share with you how you can get access to Jane as well and join us, yeah? So all I can say to anyone who wants to consistently profit, just do it. That training, which was how to read the trend that I'm going to share with you, turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the supply and demand levels and adapt it to your own trading style. Be very disciplined. Don't be greedy. Stop when you've made your daily profit and you will turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I mainly train the NASDAQ futures or oil futures, mostly in the NASDAQ now. I use my own strategy based on Simon's education. You see that? My own strategy. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. How many people would like to not have the fear of losing? I was coaching a trader this morning, and I was reminiscing on my first trade when my knees were knocking together, and he was telling me he was shaking on his first trade. Yeah. How about trading when you don't have to do that because you're confident, you know what you're doing? Yeah. The fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Yeah, hopium is the word that we say. We don't want to be in a state of hope. Believe me, it's the best and only trading to succeed with. So this is where I'm going to share with you, yeah. And again, with your permission, if you don't want to hear this and you can drop off now, it's fine. This is for those people who want to take the next step. Is it okay if I show you an offer I put together to help you know exactly what you need to do to achieve mastery of the trend? Just type a yes in the chat area, okay? If you want to do it, then stay behind. Again, as I said before, this is not for everyone. If you don't want to succeed, if you're doing what you're doing now and it's not getting you anywhere, then you need to make a change. Okay, so this is what you need to know. You need to understand how to read a trend. There's not many people that are going to teach you exactly, okay? And let me share this with you. So take it a step further and learn how to read the trend using pivot analysis, okay? Now again, you might think you know what it is, but you don't, okay? And let me share with you this from, I've had people that have been trading 25 years, 35 years, go through my training and learn things that they didn't know, okay? That help them become successful traders or even more successful traders. So what are the benefits of knowing how to read the trend? So you're going to trade in the direction of the trend. The trend is your friend. Guess what? Most people miss the last part of that off until the bend in the end, okay? Know when the trend begins and you'll know when the trend ends. Isn't that a good thing? That's exactly what we use to know when the market had topped and bottomed. And make sure that you're never fighting a trend. Make sure you're on the right side of the market. And from this, you can develop a profitable trading strategy, or guess what? Enhance an existing trading strategy. I have traders that have their own strategies already, but they're not working that well. Once they overlay this onto their trading strategy, they start to get success. So if you join my How to Read the Trend training session and trading room, this is what you're going to learn. You're going to learn how to identify the current trend of the market. You're going to be able to analyze it multiple time frames, exactly when a trend begins, exactly when a trend ends, and how this knowledge will dramatically affect your bottom line. And guess what? You can watch us analyze and trade in the live markets in real time every single day. Now, here's what people are saying about this. When I first watched, and this is very important, listen to this carefully, okay? And stay right to the end. When I watched How to Read the Trend module, which is what you're going to get now, I must admit I did not appreciate the power of pivots and their interrelationship with supply and demand. Honestly, I thought it was more of a good education module for beginners talking about what a candle is. And that, of course, I was smart enough to be able to read the trend already. Now, after having been a few days in the live trading room and seeing some pretty uncanny results from the past, at least, my first week did not have much price action per se, something clicked. So I decided to rewatch that first education module. Now I can see that it is really a lot more powerful than it first appeared to be to me, and it is quite deep. Sometimes we don't see what is right in front of our noses, as the old saying goes. I would say now that I know things about reading the trend that I did not have a clue about before doing your first module, which is how to read the trend. So the first thing I'm thinking is, why didn't I do this 25 years ago when I started? Here's a trader been trading 25 years. Johan, as a new trader, I jumped from one strategy to another, always looking for the magic sauce. I literally spent thousands of hours in various forums, blew up numerous accounts and bought tons of online courses. After a while, I realized that most of this material is produced by people like myself, wannabes, without experience, who want to survive while learning how to trade for real. What struck me when I came across TradesmartForex.com and Simon's material was his true understanding of price action. He managed to condense all of this vague and ambiguous information into a few clear and fundamental set of rules and principles. I have to date probably seen his material a dozen times, and I always discover new details that are key in my now profitable trading plan. When people ask me for advice, I often say that Simon and TradeSmartForex.com offers everything you need, nothing more, nothing less. And I'm sure that his genuine interest in you as a trader will enable you to reach your goal far more quickly than most other alternatives. I want to say that what you teach in How to Read the Trend training course is brilliant. Before that, I'd picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. You are a mastermind. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. So I mainly trade options with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I have not been able to find anything I could execute consistently. I'm just paper trading with your system. I've been doing it for a couple of weeks now and I've had far better results than anything I've ever tried. Assuming this continues, I will take it live sometime in late March. Marcus, finally, Simon's one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. Thanks a lot, Simon. Okay, so again, this is what you're going to get in the training. Okay, it's over 1.5 hours. Usually it's $397. It's on demand. You can watch it as many times as you want. Again, sometimes you may, as you go through it, more times you change so the information is the same, but you'll be able to absorb it in a deeper way and understand it better. And you also get personal access to me. You can email me follow-up questions after this session. But more importantly than this is you get 1 month access to the live trading room. Again, this is a subscription. It's $497 a month. Now you're thinking, oh, $497 a month. I have someone who doesn't even come to the live room. He watches the replays and he generated in his first year of trading last year, from March he started until December, he made almost $86,000. And he just traded based on the ideas we mentioned in the trading room. He didn't even, his trading day, he started by watching the replay because he trades later on in the day. But you also get access to our newly launched 24/7 trading community and family of traders. And in that family of traders, we have a lot of very experienced traders and newbies. So via our Discord server, and it looks something like this, okay? So join now. The regular price is $894. The deadline is on Sunday, January the 24th, and you will receive $497 off and only pay $397. So go here, this is a link, tradesmartforex.com with the number 4/promo, and I'm going to show you the checkout process. So basically you get to this page and you click buy now, which will bring you to this checkout. You fill out all your details over here and notice it says $497 monthly. That's if you want to continue paying for the live trading room after the first free month. You can cancel at any time. So today you only pay $397. You'll get an email with your login credentials and access to the membership area over here. Everything to do with how to read the trend is in here, is learn how to trade professionally. It's part 1 of how to read the market professionally, and everything to do with the trading room is over here. So if you click on access now, once you've got your login credentials, it will bring you to the membership area, and how to read the trend you'll find over here. You only have access to how to read the trend, as I said before, which is session 1 of how to read the market professionally. Now the trading room is over here, and everything to do with the trading room, or the live trading room, is over here. The daily trading room sessions are over here, and the weekly preparation session, the recording, is over here, or you can come live. We do that on Sunday every week. So that is the offer. So let's recap. How to read the trend is $397. 1 month in the live trading room is $497. That's a total of $894. But today you only pay $397. If you have any questions, you can email me at simon@tradesmartforex.com. So what I'd like to do is take this opportunity to thank you all for watching this. I hope you gained a tremendous amount from this, and I hope it will help you with your trading. For those of you who have joined, I look forward to seeing you tomorrow in the live trading room. Thanks a lot, everyone.
Hello, everyone. Barry Burns here with Top Dog Trading, and I've got a really good presentation for you today. Of course, you wouldn't expect any less, nor should you. A couple of house rules here. I know that you've probably seen the legal disclaimers before if you've been watching the entire session, but you know, on these multi-speaker sessions, people come in and out, so it's just real important that we cover at least some of the basics. I'll be happy to answer your questions if we have a little time at the end, but I do have, when I'm on the clock and I've got it at any time, so I want to just focus on the presentation right now and make sure I get done on time. So if we have time at the end, be happy to answer them. Otherwise, I will give you my direct email address and you can send me questions that way as well. Please don't trade with money you cannot afford to lose. Trading is always very risky. There's no way to eliminate risk. We can manage it, but we can't eliminate it. So never trade with money that you need for, you know, putting a roof over your head, food on the table, getting kids through college, you know, all those things, your retirement. Oh my gosh, that's for sure. So only use discretionary money for trading. All information in this presentation is for educational purposes only. I'm not giving any specific buy or sell advice. And like I said, trading's risky. The transparent truth is most people do not make money trading. It's a profession and not a get-rich-quick game. It just astonishes me how many people think that they can just, you know, come and read a book or get some kind of ebook or something and become a professional trader, or God forbid, go to all the freebie stuff on the internet and become a professional trader. There's a lot of money that's made by the professionals, and so it attracts some of the greatest minds in the world. So if you're not prepared to have a professional mindset, treat it as a profession, then I'd recommend that you spend your time elsewhere, because otherwise you will lose money. So how's that for a way to start and get everybody motivated? Well, I do that because it's, you know, I just want to be very honest and transparent with you. I think the mindset you bring to this business, and it's not a game, it's a business, is really the most important thing. That's the starting point, is to come into this with your eyes wide open, realistic expectations. So a little bit about me here real quick. There's my ugly mug. I am the author of Trend Trading for Dummies. Wiley & Sons approached me to do a book in their Dummies series, and so that is out and available if you're interested. Technical analysis of stocks, commodities magazine. I keep getting Reader's Choice Awards for my trading courses, as voted by real traders, people like you. And I work with all kinds of different companies, done presentations with Ninja Trader, Chicago Mercantile Exchange, written articles for eSignal, helped create software with Metastock, did presentations for Eurex Exchange, and it goes on and on and on. But since our time is limited, let's get to the meat and the potatoes. Or, oh, sorry, if you're a vegetarian, let's get to the kale and the broccoli. Got to be sensitive about that because both of my daughters are vegetarians. So we're going to start with some of the basics, and then I'm going to show you my 5 energy methodology. And literally my methodology is a 5-step checklist, but it's based on the logic of what actually moves the markets. And that's very interesting. And I think it's important, I know it's important, that before you trade any method or system, you understand the logic behind that system and why it actually would work. So what moves the markets? Well, do fundamentals matter? For investing, I would argue yes. Fundamental analysis is very important for long-term investing, but for short-term trading, not as much, because, well, I mean, I think we've all seen it, who have been in the markets for a while. We've seen the markets go up on good news and down on bad news, and then we've seen the opposite, where the market goes up on bad news and it goes up on good news, or it goes down on good news. And so sometimes it's very hard to predict. People are very emotional about trading. They have an emotional knee-jerk reaction to economic reports, to earnings reports, these kind of things. And so in the short term, fundamentals really don't have as much of an impact. So what does move the market is people. As I've already indicated, people will have an emotional or knee-jerk reaction. So markets move up on people's beliefs and feelings. So people believe that a stock or a particular market or niche is a really good one, whatever the reason for that belief is, and people are not always logical. They will buy. If they feel good about it, they will buy. If they're excited about a product that a company has, they will buy. If they're excited about the product and its culture, they will buy, even if it doesn't have sound financials. Now, it's not just based on individual psychology, though. The markets, and I'm talking about all markets here, whether it's stocks, forex, futures, the E-minis, options, commodities, whatever, ultimately, all these markets are auction places. That's what they are. And they're not following, the little line of your indicator on the chart. It's not what it's about. That is plotting what the people, the masses, are doing in mass, buying, selling. It's all about supply, demand. More demand than supply, the market goes up. More supply than demand, the market goes down. That's it, brothers and sisters. The market movement is about that one thing, supply, demand. So I look at technical analysis as the mathematics of mass psychology. So I do use technical analysis, but I'm using it to read what the masses are doing. And really, the movement of the market is the movement of mass psychology. So the nature of the market is very much associated with human nature. So for example, charts are maps of collective human behavior, not theories, but actually what people do. So people can talk all day long on Bloomberg, CNBC, whatever news channel that they are. And as we all know, talk is cheap. What are people actually doing? Where are they? Hey, if they let their money go into the market, then they're committed. Then they're serious. So I don't even really listen to financial news because it just doesn't matter. I mean, they tell me, oh, here's why the market moved yesterday. Okay, well, it might be of interest. If you want to watch that, that's fine. But I can't trade yesterday's news. I got to trade what's going on right now, this minute, this bar, this day. And the maps of what we call charts, but I say they're maps of human behavior. So the market isn't like people, it actually is people. As I said, nothing gets plotted on a chart until people take action, meaning buying or selling. So here's the great thing about charts. They're not theory. Charts don't map people's thoughts or beliefs or hopes or fears. They only map when people actually bought or actually sold, actual commitments. So what is the nature of people? Since the markets are based on the nature of people's behaviors, well, we all tend to be goal-oriented as human beings. So you're born and you've got goals right away. You want to be able to feed yourself. You want to be able to get mobile and walk. You grow up and you want to become, want to learn. Children are learning sponges. They want to learn everything as they can, as fast as they can. And that's part of the maturity. That's a trend. Moving forward, the trend continues. We want to develop friendships and socialize and get into social groups. And then later on, get an education, college education, get married, have children, retire. I mean, it's a trend from beginning to end. We are goal-oriented by nature. Unfortunately, those trends are not straight lines most of the time. And so even in our own lives, you've heard the slogan, 3 steps forward, 2 steps back. And so in our lives, we have oscillations. And whether it's maybe you're dieting and you do really well for 3 weeks and then, oops, you slide back a little bit. Well, the best thing to do is just get right back where you left off. Forgive yourself and move on. So 3 steps forward, 2 steps back. That's like the oscillations in the market. Okay, so markets don't tend to trend straight up. They tend to, go up stair-step patterns. And sometimes we just get stuck in life. The oscillations stop. And we just feel like we get stuck. We're not moving forward, we're not moving back. We're just stuck for whatever reason. Markets reflect that too. During periods of consolidation, where there's really no significant movement up or down. We have cycles as human beings. So we work for a while, and then we rest. work during the day, rest at night, most of us. And there's cycles in the markets like that too, where the market will work really hard, move up or down, and then it'll take a period of consolidation or rest. But still, that's all in the middle of a trend. And then sometimes cycles expand and contract. So sure, you got your daytime cycles where you're awake, nighttime cycles. But when I was in graduate school, there'd be days when I'd stay up 3 days and nights in a row. And because, well, I was pulling an all-nighter for an exam or a paper or whatever. And the markets are that way too. It'd be nice if in the markets, the cycles were all evenly measured from highs to lows, but they're not. We get extreme cycle highs, extreme cycle lows sometimes, and other times the market will go, 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 and then it just stops. So there's a bunch of irregularities that happen in the market. And human beings, well, we tend to be emotional. Even those who say that they're not, primarily most people, and of course, can't make a total universal statement here, but the general research in psychology has shown that most people make decisions based on emotion and justify it with logic, because at least in the Western culture, we feel we should be making decisions based on logic with our brain, especially our left brain, only half the brain. In the Eastern world, totally different. So, but we become emotional, and we love, we hate, we overreact, or we become passive aggressive. Definitely not always logical. And this is the problem with trading, is that a lot of people look for everything to be super logical. And unfortunately, it's not going to be. So then we ask, well, what about me? Okay, am I different than the masses? Well, you know, we all know, and these numbers are not exact, of course, and they fluctuate from year to year, but a minority of people make the majority of the money, and that's really lopsided. And I think most of us know that. So, but we come and we trade because we think that we, or me, we're different than the masses. Do you think, well, I'm going to overcome those odds, I'm different, I'm going to be better, I'm going to work harder, or maybe I'm already smarter, or whatever you think about yourself? The bad news is you've already fallen into the trap. This is what in Chinese philosophy is called the iron circle, where everyone who comes into trading, everyone thinks that they're going to be different than the masses. They're not going to be in that 95 percentile. They're going to be in the top 5 percentile. But guess what? Everybody's thinking that. And guess what? That means you're thinking exactly like the masses. So it's kind of ironic. So you use that to your advantage. Use that to your advantage. And in my training with my students and so forth, and training their mind, their psychology, their discipline, and we use what we call feedback loops. And it's a type of biofeedback loop. We don't hook you up to a biofeedback machine or anything like that. But we always are reviewing not only our trades, but which is very important, 100% important. I totally agree with the previous speaker about that. And we do encourage that, but also yourself. You got to review your own behavior, your own thought patterns, your own beliefs. This is why it's so good to have a mentor. You need someone outside of yourself. You need another set of eyes to be looking at those trading logs, looking at your behavior, looking at your results. Because someone outside of yourself can see things you can't see, you'll never see, because you're inside yourself. And this is why even the best people in anything, whether it's academics or arts or sports, they always have mentors and coaches. And the mentors and coaches are not better players than the star players. They're actually worse players than the star players. But it's a separate skill set. And they can work with those star players and say, okay, let's take tape of your last practice. Let's take tape of your last game. Let's watch it together, and let's get a feedback loop going here. I'll review it with you. We'll make some adjustments. And next week, when we go back to the game, we'll go back with those adjustments. Very important. So here's just a regular old bar chart with nothing special on it, not even any candlestick patterns or bars, no indicators, no volume, no nothing. So most people, when they look at a chart, and I would even say there is some truth to this, especially when you're brand new, you look at this and it looks kind of like a Rorschach ink blot test, where it's like, you just can't make head or tails out of it. So I'll tell you what, let's play a little game. Let's be a little interactive here. And since we're live, So what do you think? Go ahead and type into the question box. What do you think the market's going to do next here? So we got to trade on the hard red edge of the screen, obviously. So let's play a little game here. And the markets come down here. This is where it is. That's the current bar. All right. And let's say we had to trade this. So what do you think the market's going to do next? You got three choices: up, down, or continue to go sideways. So what do you think? Okay, we got some answers coming in. Breakout lower, no idea, but I'm guessing up, up, down, down. Okay. So already, even with just the few answers that have come in so far, you can already see we've got different answers. So we've got, let's see here, 1, 2, 3, 4, say it's going down. We've got 1, 2, 3 that say it's going up. I mean, pretty much even, almost 50-50. It's an odd number, so we couldn't get the exact, 50-50. But that's what makes a market, my friends. That's what makes a market. You get people, the masses who are participating in the market, taking trades. Some think it's going to go up, some think it's going to go down. And you need that because for every buyer, you got to have a seller. For every seller, you got to have a buyer, right? Otherwise, the transaction doesn't happen. So what does happen next? Well, just for fun and giggles, it went up. That's what actually happened in history. It went up. Okay, so how could you have known that? Well, here's leading into, again, transitioning from the markets reflecting human nature. So we talk about these things within our normal lives as human beings. So we, people say things like, I'm just talking about some common phrases here. I finally found my direction in life. Okay, that equates to a trend on a chart. And people say, I'm on a roll now. That equates to momentum on a chart. 3 steps forward, 2 steps back. We already talked about that. That's oscillations or cycles on a chart. Sometimes we say, man, I was doing great and now I'm hitting a wall. That equates to support resistance on a chart. And another one, people say, part of me wants to do this, but another part of me really doesn't. And that refers to the energy of fractals in the money flow. All right, so now let's bring this over to trading. So in the charts, these are the 5 what I call energies of money flow that I use to trade with. And again, they're reflective in human nature, and it's humans who are trading, or the algos that humans programmed to execute the trades based on whatever beliefs, ideas, concepts that they have at the time they create the algo. So I use 5, and I call these energies of money flow, the energy of money flowing in and flowing out of the market. That's what I mean by the term energy. So the first one, and these are in order in which I look at them, I say, all right, what's the big direction of the market? The big overall direction. I want to be trading in that direction. So that's trend. Now, the second thing is trend is not enough. Trend is never enough to trade with. It's helpful. We start there. It's step 1. But now we ask for the second energy, and that is the energy of momentum. Is this a strong trend or a weak trend? And I remember back in my journey becoming a professional trader, I got stuck with trend trading. I was doing about 50-50. I was doing okay, maybe eking out, a little bit of money on the profit side over time. But I would print out my charts of my trend trades, and for the life of me, I could not see the difference between why some trends worked and why some trends didn't work. So I hired a mentor, and he didn't teach me a lot, but he taught me one really important thing that was way more valuable than what he charged me. And that is, he would say, Barry, and he'd look at my charts and he'd say, okay, this one here, was that a strong trend or a weak trend? And I said, no, I don't know. I don't know what you're talking about. So he actually had me do a little exercise, and I welcome you to do this as well. He had me take out a little Post-it note and write down this question. Is this a strong trend or a weak trend? put that post-it note on my monitors and ask myself that question every time before I took a trade. And then he showed me how to read that, and I'll show you here in a minute too. So we want it, trends are good, but weak trends we pass on. Strong trends we trade. Very binary. And then, okay, step one, what's the trend? Now, want to get early into the new trend, because the trend is your friend until the end. We heard that before. And that's very true. So early in the new trend, that is strong, has momentum behind it, strength. Then we wait for the right time. And that's where cycles come in. Timing your entries at a swing low to go long or at a swing high to go short within that trend. Step 4 is support resistance. And those are levels that I consider blockage, or potential blockage of energy of money flow. Everybody's looking at those levels and saying, oh, here's where market shifted before. Will it shift again? Uncertainty comes in. And so people buy off those levels, sell off those levels, or take profits at those levels. So we got to be aware of those. And then the fractal energy, the fifth energy I look at is looking at the next higher time frame. So using multiple time frames, I like a 3-to-1 ratio between my two time frames. And the rule is this: I will not trade against the momentum of the higher time frame. So I don't want to buy on a short-term time frame if on the longer term time frame the strength of the market and the momentum of the market is bearish. I'm not going to fight that bigger energy. All right, so for trends, I just use a moving average. For momentum, well, use a momentum indicator. Nothing fancy here. Cycles, use an oscillator. By the way, that's a really, really powerful indicator. I'll be happy to share that with you. I've got a presentation that I can share with you for free and help you get that set up in your charts and everything. So one of my gifts to you today will be my cycle indicator, or my market timing indicator. So that'll be coming up here in about 15 minutes. You'll get that. Support resistance, for that, the tools I use are the previous swing highs and lows, wave highs and lows, Fibonacci, floor trader pivots, the usual suspects. And then, as I said, I like to use a 3-to-1 ratio between my two time frames. Now, to determine the probability setup, very simple. We've got these 5 uncorrelated energies. So I simply ask myself how many of them are aligned, being bullish or bearish. So it's literally a 5-step checklist. The higher the score, the higher the probability. I take each trade to court, and I look at this 5 independent witnesses to establish a preponderance of the evidence. Now, the key here is that word independent. That's the operative word, because these 5 energies, as measured by these 5 tools, they measure the market money flow from different perspectives, different angles, and that's what gives you a preponderance of the evidence, or a probability. So let's take a look at some charts. I'll show you exactly what I'm doing here. So energy number 1 is trend. I just use the 50 SMA. By the way, I don't use any fancy schmancy indicators or proprietary indicators. There's some great ones out there. I just don't need them. So everything that I use is on every charting platform out there I've ever seen. So if you decide to join Top Dog Trading, you won't have to change charting platforms, which is kind of nice. You also don't have to pay for any indicators, which is kind of nice. We just keep things simple. I've been trading for 50 years. My dad was a stock trader, so I was brought up in it. And I'm 62 now, so my dad got me started really, really young. And so I've gone, through everything. I've tried all the different things, and I'll tell you, the path of mastery is this. You start out and everything looks easy. And then once you get into it, you realize, oh my gosh, there's all this complicated stuff. But when you come full circle, you realize, actually, that's pretty simple. So anyway, I just use the 50 SMA. Can I use that alone to trade and make money? No, no way. But it's one piece of evidence back to our law or trial analogy. So some people say that a trend is a higher high, higher low, higher high, higher low, but not really, because, well, the dictionary, the Webster's dictionary, to be specific, defines trend as the extended general direction. So this is just an ABC complex retrace against a downtrend. And that's really important from trading point of view too, not just from proper definition of the word, but we want to have big wins, and therefore we want to trade in the direction of big moves. And that's what gives you the big reward. So energy number 2, here you see you've got your higher high, higher low, higher high, higher low. 50 MA is angling up. 50 SMA is always a lagging indicator, by the way, and that's not a bad thing. There's actually advantages. And I remember one of my mentors telling me this one time. It took me like 2 years to figure out what he meant by that, because I just could not imagine why you would ever want a lagging indicator on your chart. Just made no sense to me at all. For 2 years, couldn't get that through my noggin. And finally, I did. I got it. Now, that doesn't mean you don't want a leading indicator as well. You do. You want both. Then this is, again, putting together various pieces of evidence. So anyway, we got higher high, higher low, all looking good, except for one problem. Now the market starts to turn around. It makes a lower high and a lower low, but the 50 MA is still angling up. So how would we know that momentum or strength is coming out of this trend? We're blind to momentum. And so let's pull back the curtain, and there you go. So you see here in my long-term momentum indicator, higher high, higher low, okay? Higher high, equal high on momentum. That's your first little shot across the bow, your little warning that this trend is getting weak. Remember, we want to trade strong trends. So here, yep, I'm interested in that trend, still interested in the trend, looking here. Now, oh, wait a minute, not so interested. Momentum is starting to shift. Price can go up dramatically without momentum. It's going to still get some strong momentum, but not stronger. It's not matching price. And then on this low, a lot of people look at divergences. That can be okay. But here's the real key. On the low, momentum goes down to 0. We have no momentum. And so I don't even have to wait for that divergence. This gives me, we got a higher low on price, but a lower low on momentum. And so now we've got a weak trend, and of course it comes down below the 50 MA, and then there's a great short trade right there. Look at that pin bar below the 50 MA. Now we're officially entering a downtrend, and we've got bearish momentum, and we've got a nice candlestick to enter on. Cycles are the oscillations of the market, the rhythm of the market, the respiration of the market, breathing in, breathing out. And W. DeGan actually said timing is more important than price. So cycles are about time. Think about a chart. It's a two-dimensional object. You got price over here, you got time down here. It just astonishes me how very few people these days talk about the lower axis or analyzing time on your charts. Everybody in their parakeet talks about price, and they should. That's very important. But time is just as important. I think they're equally important. W. DeGan says even more important. Well, if you get your timing wrong, I mean, I kind of can understand what he's saying, because if you get your timing wrong, that's when you get, stopped out. So have you ever had a situation where you're long, you buy, you get stopped out, and then after you get stopped out, the market goes in the direction of your trade after all, right? That's about timing. That's because no one's taught you how to time your entries with precision. So I'll show you how to do that with my cycle indicator here in just a few minutes when we're done. I'll give that to you for free. Now, timing is great, but cycles don't tell you direction, and they don't tell you range. Direction is defined by the trend. Range is defined by momentum. So we've got little cycles here, but the reason that it's so narrow range is because, well, there's no strength. Can't see the momentum indicator here because I'm focusing on the cycle indicator and pointing that out to you. But the trend is still up. So we can get these A, B, C complex retraces, and then the market continues to go up. And then support resistance, again, blockage of that energy. So real quick here, since we're running out of time, let's just look at this one right here. Okay, so why did the market hold this resistance? Well, a couple of reasons. Number one, we've got a cluster of resistance. The cluster is this previous cycle high and the 50% retrace. Also, look, when we come back up here, you have very little strength to the upside, weak momentum, and therefore we wouldn't expect the market to break through resistance, because markets do break through support resistance all the time, but what makes them break through support resistance is strength of the order flow. And by the way, when I'm talking about strength, I'm talking about lots of orders coming through, lots of volume coming through, institutional volume coming through, orders coming through fast and furious. That's how we define momentum. Well, momentum is velocity times mass. So lots of orders, buy, that's velocity. Mass equates to the volume. And when you get that, that's what causes the market to break through support resistance. We don't have that here. We had it here when you came down, strength down, but not here. In fact, this is the rubber band trade setup. I'll share this with you also as well. I'll give you this for free today too. We're giving away a lot of free stuff. The rubber band trade, real quickly, is the basic structure of it, and I'll give you the details for free today. But the basic structure, just to give you an eye opener, is price above a downward sloping 50 MA. So the trend is still down, but price is above the 50 MA. It's got to be angling down. And we trade in the direction of the angle of the 50 MA. Okay, we'll give you all the details about that here in a minute. And then the fifth and final energy that we look at is the fractal energy. So here I've got a short-term chart. Over here I've got my longer-term chart. This chart is what I call my fractal energy. Same market, just on a different scale. So if we look at this, market's been kind of just, kind of moving sideways, consolidating. All right. And then we look at, well, actually, this is kind of cool. So we get from above the 50 MA to below the 50 MA. All right. So we're on the bearish side of the 50 MA now for a trend, downtrend. Cycle high. By the way, the 50 MA also serves as resistance here. Momentum is below zero. So this is all bearish. And then we go over here and we've got cycle is down and momentum is down. That's what I need to see over here on the longer term chart. Okay, and that means that everything is bearish. It's all aligned, 5 out of 5 trades. So everything works sometimes. Nothing works every single trade, obviously. So with your money on the line, you're going to want to know, well, is it going to work this time? So you wait until you get the alignment of the 5 energies. There was a book written called Random Walk Down Wall Street, very famous book. And they postulated that the markets are pretty much efficient, and everything that can be known about the market is already known, and therefore trading, you can't consistently make money trading. The only problem with that was there was a whole bunch of people out there who were trading consistently and profitably, and they couldn't really explain that. So the way that you do it is you wait for markets to get into a place where all the energies are aligned. If they're unaligned, if trend is up, momentum is down, cycles are flat, you're between two real close support resistance levels, that's a chaotic market. That's a chaotic market. Keep your powder dry. Do not trade during that time. Knowing when not to trade is just as important as knowing when to trade. When to trade is when these 5 energies all align. Because remember, the key to that is each uncorrelated to each other. So there's my whole trading system in one sentence, if you want to write it down. Early in a new trend, that's step 1. That is strong, has momentum behind it. At the right time, now that we have a strong trend, we look for, okay, where's the precise point to entry so I don't get stopped out? With support at your back, or resistance if you're going short, and then finally confirmed by the bigger scale of momentum on the higher time frame. And that's it. And here's how we put it together. Just give you one last example. 5 energies aligning at the same time. We're starting a new trend. Price goes from below the 50 MA to above the 50 MA, retraces. That's as early in a new trend as you can get. All right, number 2, momentum moves above zero and stays above zero on the retrace. So we've still got bullish momentum here. Number 3, cycle low for timing. So we wait for our cycle indicator to come back down, and this gives us the exact timing of when to enter, when it starts coming back up, and these horizontal lines are important as well. And we got support of the 50 MA or the 50 Fibonacci level. That's the red line. So 1, 2, 3, 4, and then 5. It's got to have momentum going up on the higher time frame, strength on the longer time frame. And look, we got it. That's a 5 out of 5 trade. I'll take those all day long, 100%. And really, that's it. My methodology is a 5-step checklist. In fact, for people buy my courses, I go through all the details and the logic and the reasoning as to why things work, the market logic, the auction theory logic, so that people are empowered with the rationale behind it. But at the end of my whole course, you get a half a sheet of paper with the 5-step checklist on it. And you just have that in front of you and you check off the boxes. The method is very robust and adaptable. It works for pretty much any market, all time frames, any time frame you like to trade, stocks, commodities, options, currencies, futures, investing, swing trading, day trading, any time frame. And it's simple, it's objective. I mean, my goodness, we're counting to 5. And the reason that it's so robust is because, again, all these markets, all these time frames are just auction places. And the tools that we use, those 5 tools, we're just mathematically measuring supply-demand imbalance in that auction place. So I kind of dropped the ball a little bit. I didn't bring anything to sell. God darn it. I know you're mad at me for that, but I do have some free stuff for you, as I've already alluded to. So the best thing that I've got right now to give you for free is a trade strategy called the rubber band trade. I showed you the example of the rubber band trade there, just the basic meta pattern, but I'm going to give you a little mini course here that is called Make Money by Breaking Every Trading Rule You Ever Learned. And that includes the rubber band trade strategy. What I want you to do is take this and, of course, demo test it, simulate test it before you trade it with real money, but prove it to yourself that it works. I'm just handing it to you as my gift to you, because I think the best thing to do is, again, actions speak louder than words, and what we want are the actions of profits in your trading account. So I just had a gentleman email me yesterday saying that for the first time, he's finally making money. And it's just with a rubber band trade, just with this free trade I gave him. And so I'm giving it to you as well. So take it, make money with it, and enjoy. It comes, this little mini course that the trade is in has 5 short videos, interactive quizzes at the end to make sure you understand everything correctly. And then that cycle indicator that I mentioned, that actually is a modification of an indicator that's already on your chart. So the good news is you don't have to mess with technology by downloading or importing a proprietary indicator. All I do is take a very, very common indicator that's on every charting platform I've ever seen, and then modify it a little bit. We change the inputs, and step 3 is to learn how to trade it. In other words, there's certain patterns on that modified indicator that we use to enter with. So don't have time for all of that. That takes about another hour. So what we do is I used to do the webinar live, now it's recorded, which is great because now you can watch it whenever it's convenient for you. So you get everything by just going to rubberbandtrade.com. That's all you have to do. Just go there, sign up, and no money, no credit card, no nothing. Just type in your email address so we can send you the videos, and you get all of it, including the indicator webinar. So let's see, how do we do? I made it by 1 minute. All right, very good. So I don't know, Anna, if we have any time for questions or whatever. I'll turn it back over to you, and you tell me what you want to do next.
Great presentation, Barry. Thank you so much. We have one question. Do you only trade if your analysis is all 5 tools ago? Would you trade if 4 hour of 5? Sorry, it wasn't clear.
Yes, no, I understand. So yeah, my trading system does allow you to take trades if you have 4 of the 5 energies. That is the line in the sand, though. 3 out of 5 is not enough, because 3 out of 5, you figure, you might think, oh, well, that's better than 50-50 odds. And it is for the probability of the trade working out. But when you add in, commissions and slippage and the various, expenses of trading, then 3 out of 5 really is 50-50. So 4 out of 5, yes, you can take the trade. 5 out of 5 is a higher probability trade. So we allow you there a little bit of leeway for your risk tolerance. If you do take trades that are 4 out of 5, then you'll get more of those trades than you would if you wait for only 5 out of 5 trades. But if you wait for 5 out of 5 trades all the time, you have that flexibility, obviously, and your win-loss ratio will be higher. You just won't get as many trades.
Do you provide STK recos? Or recos?
STK recos. I don't know what that means. I'm not a reco man.
Tacos. Stock. Diamond stock.
Recos? I don't know what he's referring to about recos, stock recos, or whoever it is. I can't see the name here. So, yeah, what are recos? Let's see. Yeah, I can't see the name. Oh, recommendations. Okay. Yeah, I didn't understand that at all. Did you understand that, Anna? Am I just like brain dead here today?
No, I'm Ukrainian. It's hard for me, this shortcut.
No, I don't make stock recommendations. No, I empower you. My whole goal, the goal of Top Dog Trading, by the way, in fact, our mission statement is to create more independent, profitable traders. So our goal has nothing to sell about selling trading courses, and that's why I'm not selling you anything here today. My goal is not to sell you anything. My goal is to get you profitable. And so this is why we approach it this way. If I can prove to you, that this trade works and I can help you make money, you're never going to have a financial independence, time independence, if you have to rely, if you're dependent on somebody else for giving you stock recommendations. I'm not saying that's a bad thing, but that's just the reality of it. If you want someone who gives you stock recommendations, then I'm not your guy. My approach is to, well, it's the old thing of, if you give a person a fish, you feed them for a day. If you teach them to fish, you feed them for life. And so that's our philosophy. I'm sure there's other services out there who do give stock recommendations that are good. I don't know of any, but I'm sure there are. And if that's what you're looking for, then that's perfectly fine. But I'm not your guy for that.